Funky, y'all. Those chords. Yeah. Funky. Yeah, let's jack to this one, y'all. Let's forget about the fact to this one. Release the energy inside you to this one.
All right. I think we are good to go. I think I'm live now. Okay. So cheers to whoever's here. We only have 3 hours, as we've been learning. It's not enough time, so we just got to get going, just jump right into it. Since the last time we synced up, talk about how I need someone to get some notes. I got Evernote here. I figure I can take some. We can take some notes in this Evernote program here, just to I don't know. I think it's really powerful. I think you can like tag stuff too, and tag a ticker, and then maybe I can filter by it. I need to do some more research as to how it works, but it seems like this would be a good thing to use on screen as opposed to a notebook. You know what I mean? So I could take some notes as we're looking into stuff here today. But I want to do things a little bit different today. We're going to start with the dashboard, as I've been doing. I think that's a good starting place just to kick things off. So just do a quick review of what happened today. Of course, what happened yesterday, right? I mean, that's a question I have. I don't know off the top of my head, but that's okay. We'll just review today. So let's see. We had China was down 3%. Okay, all right. Still looks like a relatively quiet day. As more days accumulate here, we're gonna some days it's red all over the place or green all over the place. Today it looks a little bit quieter, but some action on the commodity frontier. We had copper, palladium. The other day this stuff was up, pulling back. This is how it works. Some days are up, some days it's down. Out of curiosity, what is copper doing? Oh, that's a big drop. Oh, okay. So this is a pretty meaningful drop. What's the news? What's the news here, huh? Jeez, okay. Well, while we're here, let me pop these up too. Was palladium down big too? Let me just see. Okay, all right. So a little bit of some correction. We know it was up quite a bit earlier this week. There was some news out of China there too. I mean, I know there was some data released today too. Okay. You know what? What's a quick way to just check this right now? Let's do. I remember if we do. Get that news real quick, because Seeking Alpha does a good job of just, we don't have it for today. Okay. How about Alcoa? I'm kind of curious. That seems like a kind of a big move for copper, doesn't it? Canada details retaliatory tariff. Okay. Canada vows retaliates U.S. imposes aluminum tariffs. Okay. All right. So some tariffs. Okay. I mean, legitimate stuff, right? Set to reimpose tariffs. Okay. So on aluminum in particular, I assume might have been broader than that. Interesting. And how about gold? We know gold's been super active. That might be when things start getting like super active, whatever the asset class is, whatever the commodity is, kind of makes sense to just keep tabs on it, just see what's going on. So I'm kind of curious, even though I don't care so much about the day-to-day moves. It seems right now like a good idea. Just check up on it, see what's happening. Okay, so look at this. I think we were talking about the other day, like gold seems like it's looking really bullish and everything like that. But is this today? Sometimes stock charts. What's the date today? Today's the 7th. Okay. Sometimes stock charts, this is a daily chart, so it's up to date. If you're looking at weekly charts, sometimes with the futures contracts, they're a little bit delayed a day just because it takes a while to update. But it looks like this is today. So we're getting the pullback, you know? I mean, I think I saw it was up like 15 days in a row or something. Like, okay, this is don't be surprised if this pulls back like this. But hopefully this is the start of a bigger pullback. As we were talking about, like gold's looking good. It's really tough to buy when it's so overbought. And you can see the RSI down here. I'd like it to pull back to, what were we saying? Somewhere in the 1800 range if we look at the longer term chart. So just getting started. Really a nothing move. It's a nothing move, but something to, okay, maybe a little bit of a pause here, perhaps, see what happens next week. Okay. Cotton. What's cotton doing? I didn't check on that. Okay, so commodities, broad decline here. And lumber's still up, huh? Jeez. A lot of action on lumber. Taking a while to open up for me there. Yeah, lumber crushing it, huh? Whew. That resident. So much demand for housing and so forth. And then miners are pulling back, right? Naturally, miners are going to pull back. Okay, kind of get a feel for today. Maybe everything's taking a little bit of a pause today. That's cool. Good to know. And again, in particular, gold and silver. What's silver at? 28? God, whew. What a move in silver, huh? Wow, okay. This it's due for a pullback. That's kind of when you start seeing crazy overbought, this stuff kind of happens. Not a day-to-day prediction or anything like that, but it's a pet peeve of mine when I buy when something's like really overbought, even on intraday stuff, which obviously is silly because I'm a longer-term investor. But sometimes I'm just everyone has their own style. Some people, they buy as soon as something gets overbought and then they make money that way. I assume some people can do it that way. I can't do it that way. That's not the type of investor I am. I'm much more kind of got to buy. This is the value investor in me, right? I got to buy on the pullback or on the dip or whatever. So let's see if these keep pulling back. I mean, we have silver and gold exposure, so it's whatever, you know. Wow, value is up today, 2.7%. S&P 600. Oh, let's keep scrolling down. Let's just see what else was happening. Insurance, banking was up. Okay. And then how about our risk column over here? Gold miners. Yep, obviously. Oh, Transocean. Oh, this is noise. 3% is noise. I had to use conditional format. I got to use 3% because there's indexes in here too. But for a risky stock, a 3% move is noise. It's whatever. Okay. You see Freeport down 4%, right? That's going to happen. Lumber. Okay. Same old stuff. These are reflective of what we saw with the commodity prices. Really not much. Oh, blockchain down 11% today. Okay. So a little bit of risk out. Everything that was up earlier this week kind of pulling back. Bitcoin. Oh, what's Bitcoin doing? Another one of those things that I'm probably keeping my eye on just because it's an asset class. It seems to be making a move. I guess that's how I think about it. If something's making a move, you know, you can kind of, even if you're not directly invested in, you kind of just tracking what's happening in it. I still think it looks bullish. I think all these ones that are pulling back still look a bit bullish. It's going to take more than a single down day, quite a bit more for me to change my mind on that. Looking out a year or two. Okay, so we got a feel for that. Now what I want to do today, I feel like I've been not doing this. I want to look at the daily moves right off the bat. And what we can also do today, and this is kind of cool, I had originally thought of this, I forgot, but with a Friday stream, you can check the weekly moves. You know what I mean? So I got a tab here. Can you see it? Am I in the way? I got a tab here for weekly. Oh, let me switch over. So you got, first of all, you got the dash tab here, right? And then we have daily and weekly insider buying. Oh, I can use this thing. I got this thing working again. See that? Oh, yeah. So you got, can you see me? We got dash, daily, weekly, insider buying, screening, and then the industry. So anyway, we can do, I got to turn off flux. Okay, so we can do weekly today. Anyway, that's I didn't think about that. We can also do weekly charts and stuff. I'm still working through what this is going to look like. So I want to do daily today right off the bat. But we'll get to what the portfolio did today. But I've been starting with that, just trying to mix things up. All right, so daily movers. Let's see these daily movers. So I like this daily mover. Obviously, daily movers, you can access this stuff anywhere, right? You can access it on. There's so many websites out there that say, hey, here are the biggest movers on the day. But it's really annoying for me because I can't see the other data points along with it. Like if you want to see the daily movers, I want to see how much you move, but I want to see so much other data with it. It's the limited data that they give you when you're looking at it is so frustrating. I want to see the full picture. So that's what I try to do in this tab. Oh, let me flip back. Sorry. And so this is great because now I can just scroll right through and be done with my research of the daily movers in just one tab typically. So 83%. Jeez, 83% move. What the hell is that? What is this? Is transaction intensive processing and like what the hell is that, huh? Let me see. Usually, first thing I'll do is often just pull up the chart right off the bat. Whoa, was it a buyout or something? I'll check that. Usually those big gigantic moves, you don't see that often. So I'll sometimes just dig in. It's educational too, because then you can be reminded as to what types of things. Strong, just a huge earnings. Is it a small company? Report stronger than expected second quarter results with significantly. Yep. Okay. So just a really short. I don't know the company, so I just like to read just a little bit about it. But let me just. What's the market cap? 863 market cap. And let me just see the longer term chart. Sometimes, so I kind of screen on charts too. That's so what the handful. Oh, so this looks interesting. Okay. All right. So this one looks kind of interesting. Like if it was on a long bullish trend. It doesn't get my attention, but this kind of gets my attention. Wow. The chart didn't look too bad. I mean, it's the fundamentals that would give you the conviction to buy a heavy position, but whoa, okay. This is noteworthy. I don't know this company. Conduent? And it's interesting just because huge drawdown. It's not too old, so it looks like it could be a younger company, assuming that was an IPO. But if it got back to its recent highs here, it'd be a 4-bagger, 5-bagger. Doesn't mean it's going to happen, of course, right? This is why you look at the daily mover, something to get your attention. Then you track it for a while, and then it just becomes another company that you're tracking. But now I'm really curious about this one. Insider buying too. Check this. So in the past 6 months, we've had three insiders who are buying. They bought $42 million worth. What? Whoa. Oh, Carl Icahn. Son of a... Okay, now you... Carl Icahn. What is it? You had my attention, but now you have my curiosity. You know what I mean? That's a good chunk of... When was you doing this? May 2019? I invested alongside him by coincidence recently on another tech company. What was it? I forget what it was. It wasn't this one. It was a similar ticker, though. Oh, what's the... Okay. And this was a smaller company, too. So if this... I mean, it rose 83% today. So half of this, it was $400 million. And when was he buying him, did we say? So mid-2019. All right, look at this. Top mover today. And we already got one that I'm a little bit curious about. Let me just X out of some tabs here. All right, now let me... Okay. Let me... Yeah, you know what? Now you can't see it quite as well. I'm starting to learn how I can get out of your way a bit, you know? Revenue and adjusted EBITDA. I mean, it just crushed it. Okay. Up 90% year over year. We continue to make progress in the second quarter. Okay, it's just a good quarter, but blah, blah, blah. I wasn't curious about just... I don't know. I know very little about this company, so I'm just trying to jump to get the gist of something. All right, so I'm not seeing much here, but what if I do... what I can do is right-click, bring me to Seeking Alpha. Wow, 82%, huh? Nice job, Carl. Props, dude. Oh, a timely article there. I don't know these people too well. Healthcare segment represents a coronavirus tailwind. Okay, well that's going to help things, huh? No wonder you had a 90% year. We should have assumed that, right? Such a large jump. And is it is it a no, it's data processing, but maybe they're processing data for healthcare companies. Cannot conclude since there were other demand-driven. All right, so let me just, I want to keep going through. I'm going to make a note. So here we go. Let's use this. I don't have to research everything all at once. We can come back to it. Dig deeper into CNDT, 83% up move, icon, and interesting chart. Right? I mean, that's all we're... Oh, insider buying. A ton of it. Oh, it was mostly Carl. Not all Carl, though. We still had an extra... Look at this. Scott, a director, and the CEO recently. All in March and May. Good timing on the... how did I miss this? Because, you know, okay, so put yourself back in... I mean, so much moving in March, right? Or March and May... but let's put ourselves back in March and April, and let's take a peek again at the chart that we were just looking at. Let's do 5-year. And so this is the chart you would have been looking at right here. This would have been interesting, right? So this is the type of stuff I'm looking for. When you see something down 80% or whatever it is, and you start seeing insider buying from prominent insiders, CEOs and chairmen, or if it were Carl too, I know it wasn't Carl here, but you would have seen Carl buying back earlier, and then he's sitting on a loss. This would have been interesting, and if I was paying attention, I probably would have added that to the list of companies. I mean, what didn't I invest in back then, right? But and then it would have taken a couple of months, and you already would have had a double. Of course, some things are up 3x, 4x, 5x since then. Which means this could have some legs, perhaps. But see what I mean? So that would have been something that would have caught our attention. Cool. So I wonder how big it is for Carl. So what we can do is, so the other thing I can do from here, let's pull up Well Wisdom. I want to see how big it is for Carl relative to his other positions. Excuse me. So I want to see, it's by percent of, we want to do ownership. Well, how much does he own of the company? So 18%, that's a good chunk. Vanguard, BlackRock, nada. Ignore it. Okay, let's see what Carl's got. All right, so not one. Cloudera. That was one where we crossed paths. I think I bought it just before he made an announcement on it. I'm not usually dealing in information technology. The chart. I think it was the chart for that one too. I crossed paths with Carl quite a bit too. Wait, okay, so I don't see. It's not one of his top positions. Noteworthy. It's a smaller company. How could it be? You know, smaller for him. For me, it's perfect. Tenneco. Oh, he owns Sandridge too. Yeah. I forgot he owned it. Do I not have that in the notes? I just recently had bought some more Sandridge. I forgot he owned it. That must have been why I had seen it. Looked interesting, and then I saw he owned it. I thought it's a risky position, but he owns some too. Sorry about that. Sorry, okay. Here it is, right here. CNDT. He owns 18%. That's one of his largest ownerships of a company. All right, but it's sizable. Is it his biggest? It's his fourth biggest that he owns as a percentage of the company. I mean, and this one's Icon Enterprises, so if you can't even count that. CVR. Wow. Okay. This is meaningful, right? Because if you see a large... This is the thing, like just Carl owning it, number one. How much of the company does... Well, number two is what percentage of his portfolio is it, right? Like, is it 10% of his own of what he has to report? He doesn't have to report all his positions. You don't have to report short positions, international positions, and so forth. But of the reported portfolio, what percentage does this represent? That can kind of speak to his conviction to a degree. But then also, what percentage ownership does he have? Because once you start getting about 5%, then you get a file, you got to disclose to other people. So many people tread that carefully. Then you get to 10% and 20%, and then it can change the accounting on your books a bit as to. So people tread those lines carefully. I forget off the top of my head the rules and regulations and stuff, but it's usually 5%, 10%, 20%. And then once you get above 20%, then you're in a different ball game. But he's bumping up right against there at 18%. And that's interesting. And it's good too. And if you're dealing with a smaller fund or a smaller company and you see someone own like 9% or 10% of the company, that's telling because it's such a small company that they're... Yeah, there's just a whole bunch of variables here. It's not as simple as Carl owns it, but there's other things I'm looking at, and it's kind of promising. It's not a gigantic position of his reported portfolio, but owning 18% is meaningful. And no change. He wasn't adding to it last quarter. Oh, can I see the previous quarter? No change. He hasn't bought any recently. Okay. Right, we would have seen it in the insider filings. Okay. And then wow, I can't believe the first one we looked at gets my attention. And rarely does usually an 83% move is something super sketchy and like a bankrupt company that's just popping. But we got insider buying. This is a lot of stuff I like to see. Insider buying. Carl's involved. Not Carl in particular, but just someone who I respect and I understand knows their shit. The market cap right in my wheelhouse. The chart looks good. You know what I mean? Like lots of stuff looking good. So sales to price is 5. So that means it trades at 20% of sales, right? I'm still trying to learn that. I always said it the other way, right? Book to price 1.4. So it's trading below book. I don't know what that book looks like. Can you pull it up? Ah. They just reported, so we'll have a fairly up-to-date book. Oh. Man. I gotta figure out this because this is kind of a drag if you can't see the balance sheet alongside me. There you go. 1.5 billion on assets. Okay. A lot of goodwill. All right. How about liabilities? Do they get retained earnings? No retained earnings. So either in its relative infancy or historically a lot. It's not bad that it's throwing off losses. I assume it's rapidly growing. Well, we know it just grew 90%, but I'm just looking at the quick strength of it. You know what? Why did I not? See, this is as soon as I see a company of interest, I should immediately check it off. I kind of get in. I got to get in the habit of this. This was a newer feature that I added that's I really like, but I got to get in that habit. As soon as I see it, check it off. So at least we'll pull up the balance sheet that way too. But just seeing if anything sticks out to me. Long-term debt, 1.6 billion, but cash covers a third of it. I mean, you need the cash for other stuff, right? I'm just quick figures I'm looking at. Retained earnings. All right, yeah, this is I think I much prefer starting by looking at my spreadsheet and then coming to the balance sheet after because it's I like to get a feel for it before I do because I like to get a feel for the historical performance before I can pick apart. I see some preferred stock that sticks out to me. I don't love that. Usually preferred companies that have preferred stock, it's not really my cup of tea, but it has enough other variables that it's fine. All right, let me just pop open. Do I not have it open? It's probably going to be number 2. Oh, it is going to be number 1. Sorry. All right, that'll pop up. Okay. In the meantime, we'll come back to that. You know what? I want to mention preferred. Market cap. It's got a lot of stuff. What is it? 4.4 billion in revenues. I got to check. Usually, I said this in my videos too, but the columns. I can't. It cuts me off. But the columns are like I have everything. The most important stuff is right here. Like if we're crunch time, we're trying to see the most important stuff. Right in the middle of the screen is the stuff that matters most: the ticker, the price, the market cap, sub industry, percent to 52-week high, from 52-week low, revenues. Boom, right there. That like gives you a quick. And then I like the insider buying right there. But a quick analysis that you can, if I'm pressed, I could invest a lot based on just these metrics here. I know that's not saying much for my process necessarily, but I'm just telling you, I've had success with this. Anything else in this row? I mean, price below book. I like to see that. Cash as a percentage of revenue. So right, we know because they have debt. So cash represents 40% of the share price right now. And nothing else. RK leverage. Oh, it's not that good. So, it's just a score I have. I won't get into. Oh, you can see a definition. Look at this. So this leverage RK, just roaring kitty. It's a leverage score. Very simple. It's not robust or anything like that, but it just means something to me because is it a sum? I forget what it is. It's like a sum of Z double prime score, operating cash flow over the past 3 years, average divided by net common overhang. And then net common overhang divided by assets, and then the higher the better. And so 5 is kind of low, but I bet it's because of the debt. And okay, negative Z double prime score. It's not great. Here's a reminder on the Z double prime score. It's a good thing I include these for us. It's for you and for me. So I'd like to remind myself as to what they are. That's why I put them in here. I'm going to read this if you don't mind. Oh, I don't have the full breakdown of just what the score represents. You can do a Google search, Z double prime score. It'll pop up. There's a lot written on it. It's just one thing you could look at. There's many other different scores out there. It's just one. I just thought it was pretty simple, easy to include. I have the data to calculate it, so it's probably accurate enough. It's probably not precisely accurate. And then let me just check if it's open, if I got that. Yes. Oh, GameStop. No, number 2. Okay. Okay. See, this isn't that many years. I don't need to make a note on that, but 4 years, that's not that much. I have less conviction when I'm only working with so many years. And, but you see negative tangible book value. Yep. This is why you have retained earnings, right? I mean, there's just a shorter history. I don't know when it was founded and started and so forth, but when it went public. So this is tough. When you hear me talk about like a stock's tough to value, right off the bat, this is tough to value. Look at this. Look at these losses. You can see these, right? Look at these losses. $7 in losses. 1 year of oh, excuse me, that's EBITDA. Even EBITDA is a mess. 1 year of earnings. So this is already got, and then you have negative tangible book value. Then you got revenues. Any cash flow. Some operating cash flow, but it went negative. Past 12 months. Oh, this data is not up to date too. So just bear in mind, that's March 31st. So I think it takes a couple days for the data to get updated. Damn, okay. This is the thing. This is why it's kind of used. Just wait a week or so. Not just because wait a week for the data to get updated, sure, but also just to see the price action. I'm not like trying to ride a wave and get in as soon as possible. Like I said, I'll wait for the pullback. I like to take my time. I'm relatively inactive. It's cool. It's chill. That's how I roll, and that's why these daily movers. It's like we missed it on Monday and Wednesday, but it's fine. It's like it's no big deal. We'll see it at the end of the week or next week, and but it's good for screening. You know what I mean? So anyway, so tough on the cash flow basis, but I do see positive net cash flow. Here's something. $2 in net cash flow. That's operating cash flow. Here's a definition. Can you see it? Operating cash flow less investing cash flow. That's net cash flow. So there's other stuff in the cash flow statement in the investing part of the cash flow statement besides capex. This kind of takes it into account. I consider it more conservative. So if you trade on a cheap price to net cash flow metric, then I really like that because that's great. All right, so $2. So anyway, but relative to a stock price of what was it before? $3 or two? Right now it's $4. And so if you were making $2 per share versus a $4 share price or a $2 share price, which is just what it was, interesting. A lot of other moving parts here, but right off at least something catches my attention. You know what I mean? Simple free cash, a little bit smaller. All right, so this is already going to be tough. And then I get these charts here for a quick analysis of the balance sheet, left-hand side, right-hand side. You can see a lot of it is intangibles. Oh, it broke. Oh, did I do something? Oh, this is a drag. We're gonna have to see how frequently this happens. It doesn't usually happen that frequently, but I feel like it happened last time too. And I can't be having that happen, so I got to see if I can put a stop to that so that it only calls once when I open it up or something like that. Okay. Bummer. Let's keep moving. All right. That's the way the market's telling us. Hey, keep on moving. Keep looking at some other stuff. Okay. 2 million market cap. Skip this. You know what I mean? See what I mean? If you're looking somewhere else, you might go, oh, what's this company up 80%? 2 million market cap. Assuming this is accurate. I don't care. A 5-cent, was it 5-cent share price? Yeah, whatever. Okay, Groupon. I'm not gonna go check out Groupon. I'll check out the chart just for fun. I got no edge here. What is it? Oh, it's not that big of a company. But I mean, we know the business model, right? Business model. It doesn't really get my attention. Now HBP. They someone filed something recently. So watch. Oh, it's up 50%. What's trading company? Isn't it building products? Oh, it's actually called building products in the name. And then I got confused because the sub-industry is a little bit different. But check this. So I saw this the other day. You can see some activist action. But if you go here. Hey, oh, someone bought Vaportherm, right? That company's in the Roaring Kitty portfolio. The one with the ventilators. Okay, so... This is 13D. Oh, is it just 13D filings? Oh, okay. But I'm pretty sure. Oh, but now it's quarter end, so they're gonna see. It's gonna be a mess to go try to find it. What if I just do? Yeah, this was I just saw it this week, so they caught my attention because I know of the company, and I believe they were adding to their position. So this company owns 8% of it now, and it's a small company too. So this is noteworthy. And just a reminder as to what the company is. Millwork, building materials, and wood products for new residential construction. See? So if it's just a real estate play. A lot of these I just quickly group in my head as to what type of a play it is. I just knew it was a real estate play, even though I didn't know exactly. And I knew it was building products because it's in the name. But home improvement, remodeling, and repair work. I mean, really, it sucks to say. I mean, because I'm a fundamentals focused investor, right? But you don't need to know the full details oftentimes. Unless you're trying to go real heavy. If you're trying to go heavy into a position, you better know all the details because you don't want to mess up because you don't want to lose money because you didn't read through everything. But if you're just trying to establish the position and then trying to figure out if it makes sense in the portfolio, you don't need to know the full background on the company. My opinion. Everyone's different. But you know what I mean? So home improvement, remodeling, repair work. It's just a company, and then you know its market cap, and so you kind of know what the risks are. Okay. So no insider buying. I want to say it's not. Is it a U.S. based company? I don't have Yahoo profile here. Wait, do I? Nope, that's stock charts. I guess I don't. But check the. Oh, so I haven't done this yet. We got to get in the swing of things. But I can. If I wanted to see, well, this isn't. It should. See what I mean? Like, building products is in the name. But it's not in the sub-industry building products? What's up with that? It's kind of weird. Anyway, so if I pull up this, I can see the charts for all the peers, and I can see how the whole industry is doing. So this starts with, this is industrials generally, and then we get into, oh, I don't have the chart for that one. Something must have happened. This is Fastenal. See what I mean? I want to look at building products, but these are trading companies there. Anyway, see what these charts are all looking bullish across the board. So you might want to see this if you're looking at a company. You say, all right, well, what's happening in the sub industry, and you just want to see what's going on with all of them. Everything's looking great. Everything's looking great. I'm not trying to pick apart every last chart here. I'm just trying to get a feel for what's going on. Is it sticking out like a sore thumb, whether bullishly or bearishly? That's in the portfolio. Okay. I don't want to go through all this because it's not building products. But okay, so here we go. So let's check this one because the market cap 68 million, so that's super small. That's risky. Okay, sub 100 million. I have them in the portfolio, the Roaring Kitty portfolio, but it's risky. Number one, but also opportunity. So boy, up 50% today. Let's check it out. Let's close out of the CNDT stuff. I feel like I got enough for a CNDT. I know it croaked on us, but. All right, so look at this. So this is one of those ones I probably should have added to, but I had so many real estate related companies that I didn't want this one too. It was even smaller. The market cap now is 68. This is after it's up 5x, so it was much smaller, right? And then I was looking at what the market was doing, and then I already had so much exposure that I deliberately skipped this one. But I kind of wish I didn't. See what I mean? Let me make a note. Regardless, I want to make a note on this HBP. Let me start the notes with the ticker. Dig deeper. And then I want to do this one. HBP. I want to say chart, and I want to say activists. Activists 8%, 50% move. And then if I just back up, let's see what it's doing. All right, so this is kind of like a meaningful breakout, right? Wait, am I looking at the daily move? It's up another 50%. What's going on? We're looking at the daily move. What did it close at yesterday? How is it up 50%? Oh, this is weekly. My bad. My bad. I'm confusing myself. So maybe did they report last week? Then it came back down, then up again. It's a bullish chart. Yeah, and this stuff's kind of looking good. That's the thing. Home builders have crushed it so far. Is the rest of the industry going to come? Like CNR as a company, a building products related company in the portfolio, that it's kind of taking its time. It's sweet time to. It's a bigger position in the portfolio, but the home builders have crushed it off the bat. But I do want to check the building products peers when we get to it. Okay, what else gets it? So revenues, I like the revenues number, 700, like just under $1 billion. People probably overlooking this as indicated by the market cap. Sales to price, I like to see that. Wow. Okay, so it's, what is that, less than 10% of sales? Operating cash flow, change it to 50% operating cash flow and simple free cash flow yield. All right, I got to check this out. A lot of cash flow being thrown off. It must be levered, right? It's got to be. Look at this. It's up 5x off the lows. See that? I like to, when you're screening quickly too, you want to see how much you're off the lows and how far you have to run till you get to the highs. It's a little bit of a proxy for value, as a 52-week high is, during crunch time anyway. Sorry, I know I'm scrolling over. I should stay still. All right, what's that? Wow, it's got a 7 on that RK, and then the Z double prime score 4. Not terrible. What's 4 again? Gray zone. No insider buying. Let's check it out. Oh, come on. I gotta look into this. This is a drag. Make a note. Sorry about that. I need to do it so that it should only call once upon opening the spreadsheet. It can't be. It shouldn't be breaking. You know what I mean? Is HPP here? We'll give it a second. I think it probably just needs to update. Okay. Oh, here it comes. Oh, is it breaking again? Oh, this is not good. Bad experience. Bummer. Oh, that's a drag. All right, I'll look into that. I wonder why it's doing that. I see, you know, I said too. I mean, I can pull up the balance sheet right now, and we can do that. But I don't really feel like it. This is why this is a much faster check into the fundamentals. Let's hope it pops up. That's a drag. Sorry about that. I thought I had those kinks worked out. Anything? It says it's low. Oh yes. You know, I mean, it's weird to see it happen a couple times like that. Anyway, conditional formatting will kick in. All right, there we go. Bummer. All right, so revenues. Look at the revenue growth right off the bat. I'm looking at let's see, revenues. It used to be a bigger company. Well, that was a real estate boom, right? Bubble, and then it kind of kept it together. I thought it was a riskier company than this. It's pretty sizable revenues, volatile, but averages. The standard deviation isn't crazy or anything like that. And then gross margin. How they doing with gross margin? They pretty damn well. 18, 19, 20%. Right now we're at its relative peak for gross margin, 20%. So it could come back down to 18%. You know what I mean? Revenues. Yeah, so what is the share price? $2, $30 per share. Yeah, the market cap 68, revenue 791, trades at a fraction of revenue. So you got a lot of operating leverage. I like that. I know people talk about PE and dividend yield. I don't care about any of that stuff. If I could only pick one, it might be price to sales or sales to price, whatever you want, because it's really hard to mess with those figures. They're pretty indicative of opportunities. And then I also like EV to EBITDA. That's a good one too, I think. Is it? What I got them here. Oh yeah, it's my second EBITDA to E, because those get messy too, but I like it. And then I like price to book. Those are definitely my top ones. I like, obviously cash flow matters a lot anyway, but they can be lumpy too. All right, but let's see book value here. It's pretty stable. You can't be banking on this company to grow. It's volatile book value. Therefore, the value is probably volatile as well. Difficult to pin down. And you see the earnings. The earnings here all over the place. Losses, gains. This is you just got to time this one. This is really, you got to time it. So in March 2020, you buy it. And then when it's up 3-4x, you sell it. And then you just kind of wait because I feel like it's difficult to get conviction in these types of plays. But there, I do see value here, right? Because even though it's difficult, in those up years, I see legitimate free cash flow here of 50 cents, 80 cents, 74 cents, $1.20. That's legit. This isn't like these aren't pennies relative to the share price. So I should be tracking this. Am I not tracking this? Why? Boy, a second company we've come across. The thing is, I know this one too. Is something concerning about this that they don't have insider buying? Nothing. And let me just check who owns it. Yeah. Oh, sometimes this messes up because oh, what's the ticker? That's a whale wisdom quirk. I'm kind of blocking that for you, huh? Oh, it's family owned. Oh, yeah, and Weber. Damn. I don't know who this guy is. Weber? Is he? He can't be just an individual investor, right? I mean, he can't be. I see he's in a whole bunch of positions. You see. What's his I feel like I looked him up before. I can't. It doesn't matter. What am I gonna look him up now? Like I do this, dude. I think I did it during the other stream the other day. Is if I see someone, I'm like, who is this? What's this company? What's their background? I try to get a feel because then I understand next time I come across their name. And I have crossed paths with Alan Weber or Weber, however you pronounce it, multiple times, and he seems to have a good sense of value. Not 100% of the time, but in the same case, it's the same for me. But enough where all right, he sees something. It's funny. I just came across his name like the past 12 months. I've never seen his name before, but he deals in small companies. So. Hauser family. So is this family owned? Is this is Huttig? No, it's a different name though, isn't it? But 9%. So what I would do at this point is I'll do this, and I want to see the DE. I want to see the actual proxy statement if they have it. Oh, there we go. Yes. Okay. So I'll do this. Someone owns 4%. An executive officer. It's not a huge amount. Okay, so it's not a named executive. Okay. Who is this? Hauser? Oh, is it a German? It kind of sounds like a German name, doesn't it? Huttig. Is it a German company? No, it can't be. What's there? Okay, so let's do this. I want to see the involvement of this Hauser family, how they get involved. Do they just own it? Is it just a family that just owns shares in the company? Really? They're not mentioned anywhere else? This I have to look up. What's this one? 13G for what company? Oh, what the hell? This is the only company that they own? Did they found it? Are they related to the Hauser Huttig building products? That's the first result too. There's nothing else. I mean, there's other stuff here, but all right. What's this? DNB. That's nothing. That's interesting. All right, so let's check this. They found their first investment partnership. So this is definitely them, Hauser and Friends. It's odd. This is worth checking out, though. They own 9% of this potentially interesting company. Like maybe for all we know, they're terrific investors. I feel like we would have known about that, and I'm having a hard time getting to the website. I don't think it's my internet. Is it? What is this? It's a partnership of investors with the goal of achieving long-term. Oh, they're just investors. They're brothers. Oh, geez, okay. Founded their first investment partnership solely for family members in 2006. As friends became interested. Wow. We primarily invested. It's just an investment fund. Okay. I thought there was something else going on here because usually when there's like, it's like a family founded the company and they're still involved, they just have an unusual name for a fund. Cool. Props to them. Okay. What's their style? Our performance since when? 2006? Meh, but that's okay. That's okay. That doesn't mean that they don't have a sense of value. I'm not seeing anything. Don't you need to disclose? Don't you need to talk about what your investment style is? Okay. We buy shares of companies which are undervalued in relation to their assets and earning power. We concentrate on simple, solid business. We measure our success. I mean, that's kind of boilerplate stuff, though, you know? That's not really saying much to me. You could copy and paste some phrases like that from Investopedia. I'm not knocking them. For all I know, they're terrific investors. I just mean I'd like to see more than that. But hey, I'm not knocking them. They got a fund for their family and friends. Good for them. And now that makes I find this more compelling now because they're not just some family just messing around in random stocks. That they're trying to earn a profit, a legitimate profit here. And they saw at some point. I don't know when they started buying in this though. It doesn't matter. It doesn't matter unless I'm gonna really start digging deeper. But okay, okay. They own 10%. Alan Weber owns 10%. Damn, did we miss the boat on this? If I had to put a value on it, that's really the only question. This is really dumb. I'm never going to have super high conviction in this. This could never be a gigantic position. But let's take another peek at the chart. I see the book value. It can't be much higher than a multiple of book value, even though I do see the free cash flow of a buck. I could do it of a multiple of free cash flow there. I might say, this is tough because they have some debt. They have some debt. Look at see the levered. And then what's the adjusted share count? 67. I might say, would I say upwards of 5, 6, 7, maybe? What's the chart? What did they do? Yeah, is that all it did? Is that all it got up to? Yeah, look at that. 5, 6, 7, 5, 6. Yeah, you can't. How do you get higher than that? It's hard to get. Okay. So in this case, this isn't always the case. What I see for a potential upside based on the fundamentals is roughly what the market has seen historically too. I see like upside of 5, 6, 7. It's really, in theory, it could. If it's a transformational change to the business model, you can start getting up there. But that's why it's good. This is good. I'm glad I just did that. It's good to do your best to try to value the company based on the fundamentals alone before we open the chart. If I did open the chart, I don't even remember looking at it. But so this is good. But then when you open the chart, you'd be like, all right, so what did the market see or what did I miss? And then I'll go back. I don't need to go back now because it looks like that was roughly the right take. And the key here now is I don't like this. This isn't cheap enough. I might say maybe fair value. Good for those guys and for Alan Weber though. If they did buy right here, props to them. Nice job. Because that was a 5-bagger. So you just got to time it right. Many people are buy and hold forever. You can have a different style of investing. Just buy at the right time. Hold until you make a lot of money, you know. Fair value. I don't want to say fair value because real fair value, you really need to pick apart everything. I just say just a value. If I were to assign a value to it and keep my eye on it, I would say like around 3 to 5, something like that. You want to have downside protection too. So 3 would be 3 times that 1 year free. That 1 year of cash flow, you know what I mean? So when you have those really tough companies, I'll just do a multiple of whatever that free cash flow, as long as it's somewhat sustainable. Not sustainable, as long as it is recurring on occasion. Like if there was only 1 year of free cash flow of around 60 cents. I'd have, but I'd be really skeptical of whatever values I come up with. But I see 4 years of positive free cash flow. That's good enough to say I'll slap a multiple on that and track it. That's good enough for me. So actually, we can do this because I checked it off. So we have it open. Let's just do it. I don't have a value. Let's toss it in here. I'm going to say we'll pick a midpoint. We'll just call it, we'll call it 4. See what I mean? You don't need to be precise. Confidence level. Now the confidence level, let's do this. So what do we think for a confidence level? Maybe I should move over. Maybe I should switch to this side of the screen, huh? Yeah, 'cause I'm kind of blocking it there, for stuff like this. Confidence level, I would say, had some debt. The market cap, revenues, they had some insiders, but the executives themselves only own 4%. Oh, let's pop this open. Let's make some tags here. This will help me think as I go through. I would say, not insider owners. I can't say that there. None of these. Bummer. I think Alan Weber's listed here, though. Some of these people, I think I said this in one of my videos, the people listed here that you see here, they're not always someone I agree with in their analysis or anything like that, but I feel like it's worth noting that they were involved with the position, either wrote research on it or had a percentage ownership, because it means something to me when I'm during crunch time. I'm like, oh, so-and-so had this to say about it. Then I can pull it up. So I think it's helpful to mark that. He must be here. Weber. I don't know. But that's noteworthy. Anything else? I'd say micro, pretty small. I don't know what micro is, but is real estate. Real estate, boom. Good. Anything else we'd list there? Anything new? I'm still in the process of building this out, these characteristics. I don't want to say cash flow. I mean, I guess maybe I'll check off cash flow. It's not because it's robust or anything like that. It's just, it's a reminder for us of like, check that out. Book, auto. Nah, that's okay. Leveraged. Boom. Okay. And then I just got to pop it in here. There, fill active sell. Confidence, this is tough. All right, this is a new, I was doing it by 4. Definitely not 4, 5, 6. I don't even know if I'm 3, but it had free cash. I think I'm 3. Could be a 2 though. These are the tough decisions you got to make. But it's not that meaningful now. I'd have to remake this decision if I were actually investing, but right now it's whatever. Ownership, I think I might say ownership. I deliberately vague. What do I want this to mean? I'm going to say 20%. With those brothers who own 10%, Alan Weber 10%, and then the management team. Were they in total 10%? What were they? Oh, what? How is it 10% in total? If you add, these are all less than 1%, but it adds up to 10%? Okay. I'd still keep it at 20%, whatever. Doesn't matter. Okay. Oh, let's submit. Boom. Track, yes. Oh, I am tracking it, but I'm going to add it to the watch list. It wasn't on my watch list before. Oh, and I want to add CNDT. See, I should be, let me submit this. Let me do this for CNDT too. We looked at it long enough. I don't know what the value is right now, so let's skip that, but let's tag it up. And let's say Carl, wait, who was bought? Oh, the insider. Let's do insider buying, CEO, board, and let's say Carl. The reason so I made that note of it, so I got to figure out what I'm going to do here. You know what I mean? I want this notepad over here. I don't know what I want. I want that for us to take notes as we're looking through stuff, but I don't know how I'm going to utilize it. Icon. And then it was leveraged, turnaround special. Kind of forget what else. I think that's good enough. There was some cash flow there, but I'm not going to document that. Track. I'm going to add this to the watch list. Carl will be in there on that chart. That looks good. Oh, I should add something that says chart val. Oh yeah, there you go. I'll just type it in now. I know that means something different. Let's do I want to say something like interesting chart. Oh, you know what I mean? Like these were like tags. Oh, preferred stock's a good tag. Okay, let's do this. Let's do this. Preferred stock. Are these just tags I'm jotting down over here? Interesting. I just want to say, yeah. Chart interesting. Market cap. We have the data points. So you don't need to mark that. Boom. Submit. Yeah, I don't know. We'll figure out how to use that Evernote thing. I'm not so sure. All right, 755. Oh, we're only through 4 companies. Man. But 2 out of 4. That's I don't see really most days there's nothing happening. Most days there's nothing happening. So eventually these streams will reach a point where this whole process is going to be streamlined. We're going to know exactly what we're going to be doing each day. But we're just not there yet because I need to figure out how this works, what works best. Because some days you're doing thorough research. Other days you're actually actively screening and digging into companies. Most times it would be nice if it's like this. You're like looking through the daily movers and there's actually stuff happening. Yeah, it's just as you know, there's just different days. You're doing different types of things each day. So it's hard to, you don't want to pigeonhole yourself. Anyway, let's keep going. So at least we looked into that. I'm going to remember this now. You know what I mean? We're not buying it right now, but it's good we did that. HCI Group. I'm not looking into insurance. Not going to do it. This one, I've heard people talk about this one, but I peeked at it. I'm not my style. Look at this. Look at the low volume too, which some people perceive as a good thing. It can be. It's just not mine. This isn't how I at least need. This isn't my style. Really low volume, really small companies where the assets could be worth something, but that's not my style. This one I missed the boat on. Big Five. I was invested this. Add this to the list. I already know this off the top of my head, but remember we were missed opportunity. I was invested in it right, like here and here, and then it was doing nothing. I didn't sell out because it was doing nothing, but I started to think that they weren't going to make it. It's a smaller company. I don't even think they have publicly traded debt or anything like that. But I remember thinking, I don't think they're going to be able to pull this out. And then they have this, look, and then when they sold off, in my head, because I had been tracking them for a while, I'm like, oh, I was right. Now it's selling off. It's probably done for. And it looks like it appears I have made a mistake. Because what is this? 8x? Let's see this. Should I flip back? Maybe I should move over to this side on the camera. Sorry, as I look over, then I see me. Because the reason I put myself on this side is because now I'm blocking this column, and there's nothing in this column over here. This is this column right here. This is just links and stuff, you know. So it's up. It's 11. It's 12x. Oh. Okay, so this one, the other ones were like triples and 5-baggers and stuff, and I have those already, so it wasn't as big a deal. This one's kind of painful. Whoa. Right, because it got all the way down to, I was thinking $1, got down to 70 cents. That was just, it was just 1 week, right? But I mean, it was that was the week though, right? But it would have been closer to $1. It would have been real tough to. I mean, you might have dabbled on that day, but your average price probably would have been about $1. I need to read the news release on this. I need to see. I gotta see. I didn't think it was. I didn't think they were gonna pull it off. How did they pull this off? Like, are they thriving right now in this new environment? Sorry, see if I can get this for us to read. All right, that's good. Stephen Miller, I think he's been around there too. Second quarter earnings, strong second quarter is while managing the business through extreme disruption, including widespread store closures, significant our ability to successfully navigate this environment. Engaging with us in their local neighborhoods in a safe and inviting manner, attracted to our diverse merchandise assortment and compelling values. How's Dick's Sporting Goods doing? Oh. You know what I mean? This is the thing when you're looking at a company like, all right, so they bounced back really strongly too. Wow. Dick's was a triple? Wow. Big move, huh? So these, I remember thinking about sporting equipment too. I had kind of written it off. This was my thing. Fiscal July same store sales increased 32%. What? What are you gonna do? What are you gonna do? That's why I truly do. I hesitate to write companies off because yeah. I just drag my feet doing it. But I had watched it for so long and had been invested, and I'm like, forget about it. I just didn't think they'd be able to. That's the thing. I think this is out on the West Coast too. And okay, Stephen Miller. We produced second strong. Try diverse. The momentum that we saw over the back half of the second quarter has accelerated into the third quarter with the same stores increasing 32%. That's incredible. It really is. Across a broad array of categories and throughout geographic markets, improved financial performance has carried over to our balance sheet, reflecting our very healthy. They did have a strong balance sheet. They have no debt anymore. They had a strong balance sheet. That was why I liked them. A retailer with a strong balance sheet, GameStop. But that gets my attention because retailer, it's a tough business. And but for the longest time, they had a strong. But it just kept on heading south. They have no debt now. I don't even want to look it up. I'm not going to go look up the fundamentals. I can't bring myself to do it. I will track it though. Look, it's not even. Is it not even? It's not even on the watch list. Bummer. I'm really curious about this. This is the thing. Even though like the ones I get wrong, I'm reading about them. And be like, what? Pleased that our strong recent performance and solid financial position to reinstate our quarterly dividend. Oh, they're reinstating the dividend. That's rough. Boy, you don't see that too often where they reinstate, like for the speculative company, it's like GameStop cut their dividend, but other companies cut the dividend. Usually get your, if you're a smaller company, you cut the dividend. Usually I mean, that's a good move to do because that means they're really trying to make it, trying to turn things around. I remember thinking this guy might have it. I think he had been with the company a while. I forgot off the top of my head. But, boy, reinstating the dividend for this turnaround, props to the Big Five team. Very impressive. And that's why the stock, I mean, now people trying to capture that dividend, right? We're impressive. We are confident in our ability to respond. 10x. Another 10x. As previously reported, same-store sales decreased 4.2% for the second quarter of fiscal as compared. Wow. Wait, what is this? What quarter is this? Wait, what? Wait. Oh, Q3. Oh, okay. Oh. What? When did second quarter end? Kind of misleading, isn't it? Yeah, it's misleading. I think GameStop did the same thing, right? Because the quarter ended. It says what did I just see it? For the quarter ended June 28th, but then fiscal July same stores increased. All right, okay. Still impressive, but okay. I thought the whole quarter was up 30% year over year. Excuse me. Damn. But actually decreased 4.2. Okay. That's a little bit less crazy. Over the first half of the second quarter, same stores. Over the first half of the second quarter, same stores has decreased 28.2%. Over the second half, look at it. See what I mean? So this, I know it's just one half of the quarter, but look what the stock price did. You know what I mean? People always focus on those comps, right? But it's not necessarily reflective of what the stock price is gonna do or it is doing, and so forth. I can't look at this anymore. They reinstated the dividend in light of the current strength of the cash flow generation and balance sheet. Reinstated its quarterly dividend at the previous rate of 5 cents. So get a cash dividend of 10 cents. As discussed in the release of this, the company has experienced dramatic swings in the sales trends due to the Dramatic swings in sales. While sales trends have been decidedly positive since the company stores reopened with its same-store sales. Did they just... okay. The dramatic shifts in customer demand and the uncertainties of these unprecedented circumstances, including any future impact on consumer spending, blah, 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 blah. Assuming the company achieves sales within that range. They're forecasting. Okay, so it believes it's reasonable to expect same-store sales over the remainder of the fiscal 22 to in the range of 5 to 15%. So they obviously expect that growth to slow, but still 5 to 15%. Props to this management team navigating this tough environment. Crushed it. Nice job. Nice job. I know it wasn't a position, but props. I still like to see it because it's tough. It's a smaller business. What's that? Is that market cap? It's 171 now, and it's up 10x. So, it was 17. Remember I was talking about, was it really 17 million? That market cap? What? That's tough to bounce back from. That's real tough. I remember I probably looked at it in March, even though I'm not tracking. Maybe I came across it. If it was a big move that day, and so it was 17 million market cap. Wow. Okay. Sorry. I gotta track this now. I can't believe I kind of missed I tracked it for years. I'm gonna add it to the watch list. I'm not even gonna tag it. I just want to add it to the watch list. So that sucks. That's why you track it. It sucks in that you track all these stocks and then drag your feet to write them off. Drag your feet to write them off. And a lot was going on in March. I keep saying it sucks and whatever. It's not that big a deal, but it's always a learning opportunity, right? And in that light, I'm happy that this happened because even though again it wasn't a position, but like I saw something there, and these different elements. This is what I mean, value, subjective, and stuff, and you're trying to piece together the different parts, and there was something there. Just the timing kind of threw me off, and then everything happened. But it's kind of nice to see it work out in the end, because it speaks to the process. You know what I mean? And good to know. Cool. Okay. Zag. I never really liked Zag's business model. What's that chart doing? Don't they got like the headphones and stuff? I mean, you might think that's an interesting chart. I've disregarded it for years. Watch, I'm gonna regret this. Now I'm streaming it, so I can look back and watch it. Let me open this again. Let me just see the longer term chart. You know what I mean? It looks. I've looked at it. I've seen it here, and then it keeps going down. Seen it here. Seen it here. Seen it here. Is now the time it's going to turn around? What's the actual description of the business again? I never like that. Those accessories. Can't you get? Doesn't everyone make them? Everyone makes them. Zag, Invisage, Shield. You don't. Maybe some people do care about the brands. Do anything here compelling? Any insider buying? 12 months, 300K. That's not much. Nothing recent. No. If the company wasn't buying in February, March, April, what the hell? Why weren't they buying in February, March, April? I know a lot going on and stuff, but I mean BGFV wasn't buying in April. But anything here look compelling? The revs 500 million. Wow, they still have 500 million in revs. Sales to price, so 4.2%. So what's that? Just under 25. Just under 25%? That can't be right, is it? Where's my calculator? I gotta get used to doing these opposite. Oh, did my daughter take it? She might have. Oh, no. All right. Not that important. Okay, I'm not gonna look into it. Watch, I'll regret this, but that's okay. Teradata. So right now, like the moves, I don't really care too much about the moves, right? 17, 18, 9%. It's whatever. I just view these as like attention grabbers, you know? Hey, heads up, look at this today. Hey, heads up. That's why it's kind of important to do this when we're streaming, because it's like, this is why it could make sense to do something every day too. Maybe down the line, we'll see. I'm just trying to see what works, what makes sense. And so it's like, hey, remember this one? Remember this one? And that's what insider buying can do too. Hey, remember me? Because if you're not very closely tracking, if it's not on the portfolio or something, these things are good reminders. So that's why I like to check these frequently. Somewhat frequently. Civio, I couldn't. Like I see this telephone one. That's not my cup. I'm not really doing wireless. I mean, if I was gonna look at wireless, I'm gonna look at the industry. I don't feel like doing it now. I'm not really. IT consulting 2.7 billion. That's what I see here. Nah, I don't see any insider buying recently. The market cap's kind of big for me. I've never heard of it before. I don't see anything here catching my attention on this side. Nothing's lighting up. Keep moving. If you see anything on here and you say, hey, so and so owns this company or something, that would be helpful. Like, excuse me, I'd love to have that in the damn spreadsheet. I tried to do this once, where I would copy into a spreadsheet also a lot of prominent value investors and their holdings and stuff. Maybe I'll do it again. If I, oh, you know what? I think I reached out to the guy who runs that website to get into Google Sheets. If I could download the stuff into Google Sheets, I'd be all set, because then I can say, does so-and-so own this company? And I could have a cell dedicated to who owns this company. But right now I don't have it, so it's manual, and so I'm just not going to look. Civio, I've owned them in the past, but I thought they were, it was it never really worked out in a big way. It was one of my duds back in 2015, 2016. Like, I thought it was going to be a huge winner. And it was like a double or a triple, but yeah, look at this. So this is close enough to the low. It only got down to $1. Then it really only got to 3x. Like, I thought it was a better business model. They make the the mobile home type things for miners and stuff. Like, if you're mining out in some remote area, they set these home. I think if that's what they still do, it's got to be. It hasn't been that much time. Hospitality services to the natural resource industry. So interesting business model, because I feel like they had a little bit of a niche there, but it coincided with mining was booming. You know, and it was spun off from Oil States International. Doesn't matter. And I remember looking at the numbers within that 10K after it was spun off, thinking, "Holy shit, these numbers look really good." But it was a boom period. And then after it was sold off, and that was the thing, it looked like it might still hold up well even if oil prices collapsed, and then it didn't. And they no one was renting their stuff, and it turned out the business model wasn't as robust as I had thought. And ever since then, I've kind of been every time I see it, I think, yeah, it could be something there. I mean, I'll pop open the fundamentals because it's been a while since I've checked it out. But what's the stock? What's this look like? Yeah, it didn't. All right, so it did get down here. This is a double. Wow, a nice couple of days though. They must have reported solid earnings though. I did see some insider buying recently, almost a million over the past 12 months. Let me see this. Oh, that's the same one. That one's, what's that? A little bit. Oh, they were buying in March. Props. At about $1. Dobson, he's been the CEO this whole time. He was buying. See if it pops up here. I guess I need to give it a little bit more time. Right, this is the ad hoc one. Ah, wow, it does take a little bit of time. Okay. Anything else? 550 in revs. Wow, that's not as much as I would have thought. It's what's the market cap right now? 178. Trades at half a book. I think, is that what book to price 2 means? I think half a book, but only just under tangible book. Here, you definitely there's no goodwill here. How is it not written down? How does it still have goodwill in the books? You know, or intangibles rather. Tangible book is with a company with an industry like this. Forget book. And then simple free cash flow of 60%. That ain't bad. So maybe it's still generating some cash flow. That's good. Anything else? Leverage. Okay. Oh, it's still not out. Oh, what's going on? Taking a while. There it is. Taking a while. It's worth checking out because I mean I looked into it for a while and I owned it again, and it's been a long time since I looked at it for the reasons I just laid out there. See what I look at. So it's revenues are half of what they were in 2014. Booming time period. Book value doing nothing. Are they earning anything? Look at 6 straight years of losses. No wonder. I mean, it's no wonder I wasn't still generating some cash flow, but really not that much. Still, it's something. 30 cents on a $1 share price. That's something. No wonder it. So this, I mean, it looks kind of interesting at 50 cents, right? You're trading at 2 times simple free cash flow. That's all right. That's something. It's not that. That's the thing. A lot of stuff was looking stupid cheap, you know. And I was like, ah. And so if it weren't for the debt, they'd be okay. They've been paying down debt. I need to clean this up. This looks. Here's the debt. You can't see it. This whole graphic. I should have moved this. I need to clean up these spreadsheets. Here, I'll put myself in the middle. There you go. Total debt. All right, so they've been paying it down at least, but they still got a couple. They still got a couple hundred million to go. 317, latest. And the book, what's the book comprised of? We already know, right? It's those hospital, the mobile homes or whatever they call them. Those are okay. In a fire sale, who's going to buy them? Some people will buy them, but it's not like they definitely have value. I'm not saying they don't have any value. It's just not like super intriguing. The book value is 88 cents right now after some write downs. It's probably not worth more than $2 on the upside. So that's what I mean. It kind of looked interesting at 50 cents. All right, let's track it. We'll call it, well, I mean, gold's heading up. And I mean, I think it was mostly oil sands, as I recall. Let's check it out. Because oil sands, that's going to struggle. That's going to struggle unless we have substantially higher oil prices, which we could get. I just want to see a little bit on the background of the company here. We're hospitality, like if they talk about what they're provide a full suite. Yep. Canada, Australia, and the US. Yep. But what, like, does it break down the commodity? You know what I mean? Canada, is it safe to assume? It's not safe to assume it's oil sands. I got plenty of commodities up there. Historically, oil sand. Okay, our business is the level of production of oil sand deposits. Boom. Activity level in support of extractive industries in Australia. Oil production in Canada and coal production. So it's broad. Okay, so that's the thing. So if we're entering a multi-year bull market in commodities. All right, let me think about this. I mean, commodities have been like I don't think this has been in the works. If it's happening. I don't think the inflection point is 2020 for commodities. I think 2015, 2016 maybe, but although it wasn't for oil, but just generally. I mean, maybe I shouldn't write this off. It's a leveraged play to the industry. You know what I mean? Because but then you're betting on a boom. You're really betting on a boom period. You know, because we may be years away from that. Let's track it. That's all I'm gonna. That's the thing. It gets tough when you start trying to value something based on historical fundamentals versus where fundamentals will be in the future, right? I mean, that's value investing. But like if you're trying to forecast like a bull market in a particular commodity, like gold miners, for example, gold miners did look cheap 2015, 2016 relative to book value and a whole bunch of other metrics, like what they were earning a couple of years back. Even if you didn't think they were going to start earning that in the near future, it's like, all right, this is objectively cheap. But then it reaches a point of like past couple of years of like, all right, they bottomed out and now this is probably a multi-year trend because that's often how it works. And then on the pullback, even though it doesn't look as cheap as it did back in 2015 and 2016, if you perceive it as a pullback of a longer term trend that has turned, then you buy, even though it doesn't look as cheap. And you buy, all right, because the upside could still be the same as those super discounted prices a couple of years prior because there's a bull market that's underway. And so it could be the same thing here with a company like Civio, if that's how you pronounce it. All right, yeah. What more to say about it? Because that's what I mean. You know what I mean? So what I'm trying to get at is that these historical fundamentals, where I say it doesn't look that cheap, but if everything's turning around, and this balance sheet isn't too levered, I don't think they have any bonds. But let's check. That I'd like to see. I don't think that they have some, but they might. Sometimes you gotta spell it out just to check. Yeah, I remember it being higher quality debt, whatever it was. All right, now I'm kind of convincing myself to pay closer attention to it. I don't so much. Maybe I'll give it $3. I know. Look at this. It was up at $4. I'd say $3. Why am I saying $3? How do I? This is the thing. How do I justify to myself certain valuations? I know, even though I can't see the numbers, I do recall it was earning about $1, roughly. It could have been $2 back in the day during a boom period. You can pull it up. If it was Oil States International, when they were spinning off, they were providing what the financial statements look like specifically for Civio. That's where I was looking at. So it was pro what did he call it? Pro forma. And then they're still generating cash flow right now. That's if it were, I don't know, just to use a number, 10 times simple free cash flow of the past 3 years of 40 cents, then you're at $4. Okay, this kind of it looks more interesting than I remembered at 50 cents. I probably should have dug in. I probably just didn't. You start developing rules of thumbs for companies you're tracking too, for better or worse. At least it's generating operating cash flow. You know what I mean? This whole time, operating cash flow, operating cash flow. I like to see this. I get real nervous when they're if you can't even generate cash flow, operating cash flow. You know what I mean? Earnings. I'm not so much worried about earnings, but operating cash flow, you better be generating it, because that's what I'm betting on. All right. Okay. Was the market cap still small, right? 172, $1. And those insiders are buying. Do I say $4? $4 seems steep. I'd have to remember. No, because it's $1 right now. I just want to. It's got debt. Is it considered levered? What's the new? So the share count is 255. Oh, did they just issue shares? Look at this big jump up. I missed this. 169 to 255. That's the outstanding share count. Holy, at quarter end. Wow. Oh, okay. And did they use that to pay off the debt? Let's pull up the cash flow statement. Wow, I can't believe I'm spending this much time on Civio. For better or worse, right? When would they have done it? Well, if they did it this year, which we don't know, but let's see. Credit. Maybe it was last year. Was it last year? Let's see. Whoa, did they do it just in time? Good for them. Did they do it last? What? Or was it issued convertibles and they converted? You know, I mean, there's many ways, there's many reasons. What the hell? There you go. Proceeds from issuance of common shares, 64. That was 2017. What the hell's going on? How's your share count gonna jump like that? What am I missing? Let's check the balance sheet again. Oh, you can't see. I'm sorry. I need to remember when I go to the SEC website to flip over so you can at least see this stuff. So you can see that stuff over there. Common shares, authorized. What? What the hell? What's going on here? Is this a mistake in the data? Well, that's comparing to December 31st, 2019. So if it happened before then. Okay, let's cover. No. Cover. That looks like the data's wrong. Great. Damn. Why is that data wrong? Okay, this is as of for the 6 months ended June 30th, 2020. Shares outstanding 171. Shares outstanding 255. Bummer. This isn't tied to. Is there something wrong with my Is it looking up a number it's not supposed to be looking up? Why does that say 255? AR 29. So I gave myself some like calculations if something messed up. I don't know what that is. This just looks like a wrong number. Looks like they got the wrong data. It's kind of throwing the numbers off. All right, it's fine. I might bump this value up. I'm gonna submit it and I'm gonna track it too. Wow. Okay. I'm tracking a lot today. Stuff that previously was tracked and I decided against it, and now I'm gonna say $3. Oh. But I just need to understand the risks. It's balance sheet doesn't look too rough based on the spreadsheet that I was just looking at. It's generating operating cash flow. It's hard to say 4 though. How do you get 4? I can't say 4. Could I? No. Plus the industry. That's it. I struggle with where do you assign confidence levels? You know what I mean? You assign confidence levels at the company level, right? The business risks and so forth. But then there's also industry related risks, and there's sector related risks and so forth, and then market related risks. You know what I mean? I mean, you can be investing in a solid business, but if you're in a foreign country with questionable laws and regulatory bodies and so forth, there's more risk there. So there's many layers to risks that you could apply. So I guess I just say 3. It's not a big deal. We learn. We learn as we go. Oh, I meant to go down here. I can adjust it. Oh, I do want to check ownership here for actually. Let's check it. Horizon Kinetics? What? Yo, that's a legitimate company. When did they buy that? They bought it this quarter? They own 42 million? I remember Prescott's owned it a long time. They own 25% of the company? Yo, that's legit. That's a legit company. Ain't it? I followed that. They're in my list. Check this. I think. They're not in the first one because I don't have much overlap with them. Are they here? Are they in the first list? Well, maybe I decided again. Are they Horizon? Dude, I mean, I definitely had them. I wonder if I decided not to just bookmark them because I didn't have enough overlap with them. I feel like they're in my list somewhere. Okay. Wow, I would have bet money right now that they were in there. Okay. They're legit though. That's not the one who who's the person? Isn't there someone who where's the about us? No, it's no individual. I thought there might have been an individual associated with it. Our team senior management. Stahl. Bregman. No, they kind of ring a bell, but okay. I think they write something that I used to. Okay, this changes things. I don't. Let's see if are they in my list. Is Horizon here? There we go. All right. So I knew they were somewhere. They're right there. I bookmarked a whole bunch of them quickly to get them into the other video. Wow, they own 25%. That's some conviction. That's some conviction. Wow, that's good enough for me. They're not. I don't know enough about their style. It's not like it's like Bari or something buying it, or Einhorn, or was it? Yeah, this Toll. That's another one. Or it's just a different type of thing. But still, I know they're legitimate, and that's why I believe that's why I have them in the list there. Sorry, I keep clicking all around. All right, but let's do this. Civio, one to keep an eye on now. We just missed that jump, right? But this is it got my attention. I'm gonna say Insider owners. Is that the right word to use? What did I mean when I did insider owners? I forget. I meant executives. That's what I meant. I meant executives. They're not buying. Has anyone bought? There was buying, right? How much though? A good amount. Buy the CEO. Who else I had it open? I'd say CEO and board. I like to check them off so I can see there was a whole bunch of them. And then we got Horizon in there. And anyone else? Even if it's small. Weber, there he is again. Alan Weber. See what I mean? Cross paths with him. Weber. All right, I got to check off his name. That's what I'm talking about. That's why I keep on scrolling. It's 1%. How big of a position is it for his portfolio? Percent of portfolio, 0.63. Not big. How big is it theirs? Oh, see, this is the thing, though. Percent of portfolio, 0.68. See what I mean? So they must have a ton of positions, which discounts the importance of this. Do their holdings... All right, they're at least idiosyncratic holdings. Hey, they own HHC too. Me too. How many positions do they have? 400. See what I mean? 494 rows. I mean, each position matters less, especially now TPL. Now, okay, that's where you see them too, because they own Texas Pacific Land Trust. You know that story? Google it. They own didn't they own the land that the railroads were on or something? And Horizon's been buying. Watch the insider buying for this one. It's kind of a riot. They've been buying small. I don't even know. Look at the small dollars a month, 8,000, 8,000. They're doing consistently every day. Something I don't know why. They're an activist investor in that firm. But anyway, you don't see this too often. They've had these $8,000. There's a reason to it because I'm sure it has to do with their fund. But anyway, I just never see it, and I think it's funny. So that's where I see their name all the time too. And I think I read their analysis on that play. It's an asset play. It's not my style, but they seem to know what they were talking about. I'm like, all right, I get what they're doing here, and that was like, all right, And then I remember it sold off below 400. I remember thinking, oh, this is probably a buying opportunity for TPL because they were buying through the 700s and stuff. I didn't buy because it's not my style, but okay. 0.68. So it's not a huge position for them. But let's do this. Oh, and then Weber. I'll toss Canada on here. Canada, Australia. I think it's mostly Canada and the U.S. This isn't really why I have. I'll keep Canada. I think they reincorporated in the U.S. So Canada's where they reincorporated in the U.S. right as I was getting involved with them. It was a spinoff, but I'm not going to call it a spinoff here. I should say, do I have oil? Energy onshore, definitely. Did the chart look interesting? Could we say that? No, I can't say that. Oh, I keep jumping all over there. Secular risks? Yeah, perhaps. Oil sands? There's secular risk there. You go. Well, it's not just oil sands, right? I mean, but it's alternative energy and so forth. Am I going to list that for every oil company? I don't know. All right. Oh, am I in the right cell? Boom. Oh. And then we'll say ownership. Oh yeah. Oh, and I just wanted to check. This too. What? Who's this? Look at this. This is why I checked this, because this won't show up in the Well Wisdom data, because that's only funds who have to report. I mean, if you have a Bloomberg terminal, this is here on a Bloomberg terminal. Lance Torgerson, what's 3? Oh. What? Did I miss that? Oh, it is there. Oh, I was wrong. And it's a 13D. My bad. I just overlooked it. I just missed it. Who the hell is Lance Torgerson? What? 30%. They got 50% of the company. He was selling. Oh, 50. He's selling. He had 59 million. He had 59 million. When was this? March 25th. And now look, he has 30 million. How can that be? If he only sold 2 million this quarter, how can that be? That seems not like it's not right. Whatever. Who is Lance Torgerson? Same thing. And that's his only. I always find that interesting. Is he in the mining business, maybe? Oh, what's this? Here we go. Oil sands camp company, Noralta Lodge, bought by American multinational, one of Alberta's major oil sands accommodation companies, that's what they call it, which operates 11 lodges, was taken over by Houston's Civio Corp deal. Yeah, Civio Corp in a deal completed last week. Oh, they acquired his company. Boom. Got it. Had 159 million in revenue last year. The purchase includes cash and shares that will result in shareholders in the privately owned by founder Lance Torgerson, controlling about 1/3 of Civio stock. Wow. That's a big acquisition, ain't it? All right, so that's less meaningful. His position, especially if he's actively selling like that. I gotta spread out these spreadsheets. I'm getting annoyed. Keep clicking on this. Keep clicking on the wrong spreadsheet. You know. Track, yes. Got all that. Watch, yeah. I gotta add it back. Okay. On deck pulse. Nah, that's good. I think that's cool. I don't love it at $1, but it'll sell off with everything else too. If oil turns, it will sell off, and value stocks generally it'll sell off. But it seems like an okay. It seems like it makes sense in the context of a broader portfolio as a play on the mining industry and commodities generally. It's nice to have different ways to play commodities. I think I said this in the other stream too. It's nice to play It's nice to have other ways to play a certain sector or industry than direct exposure. Let's say oil and gas exploration and production. Besides someone who just owns oil reserves or something, maybe someone who owns the drills. Of course, there's drillers, but then someone who has the water, that gets the water to help you frack or whatever it is. And then what else is there? Stuff like that. Someone who that type of stuff, or who owns the homes there, the mobile homes accommodation business. And it just diversifies things just a little bit more, but still. What did that get submitted over? Oh, it did. Okay. Boom. Okay. Oh man, what time is it? 8:40. We'll get. I think we'll get faster at this as I get myself up to speed. Full House. Hey, I remember that show. What is this? Full House Resorts. Casinos. Well, I'll see the chart. Casino stamps. Oh, I missed out on stamps.com. This wasn't one I can't even pull up the fundamentals. Ugh. But remember this sell-off? Huge sell-off. Should have been bought on that alone. It was kind of it was a deal had fallen apart that it had, and was it with the postal service, USPS, and then they bounced right back. I remember thinking I was just I should have dug into it deeper. That's what I wish. And it looks super cheap. It looks super. That's the thing. Some of these times they fall off for a legitimate business reason, and then it's trading stupid cheap. That if whatever the agreement that fell through changes or whatever, if they find a new one, I don't even remember what it was. I wasn't super dialed into it. Then you expect a strong bounce back, and there you got it. I mean, it's almost. Is it going to be a 10 bagger? Oh, that's sick. This is a great. They should write about this one in finance textbooks. Where cool. Well, good for the people who got involved there. Nice work. I don't know if I would have held on this long. Maybe that's really changed. I don't want to dig into it now, but that's a good learning if you want to check out like why it sold off and then how it bounced back. I should read up to why it bounced back, but I just kind of want to keep moving. Stamps.com. USM, real estate. Holdings. I'm just trying to see if anything sticks out to me. Looking at the market, I'm looking like right here. I'm not so much looking at the performance. Just looking at the industry, the colors. I'm still the real estate. I'm sure the colors are the sectors. Horizon Global. So this one I've been invested in. Oh, it's reported earnings, sold off, and then changed their mind. I've seen this happen before with this company. Oh, look at that one. But there's definitely some PE firms involved with this one, and it's like I think they do like the tow trucks. I think they make tow trucks. I think that's what it is. Let's see. Range of towing, trailering, cargo management, and operates through Horizon. Yeah, they sold off some of their weaker segments. It was highly levered, but I think there were some PE firms involved, and I didn't love the risk. It seemed kind of, and I think there was preferred stock too. I rarely love that. But it could be one worth keeping on. I'm not even. Oh, I got it on the on deck portfolio. See that? That's like it didn't quite make the watch list, but I still wanted to keep an eye on it. Smaller company too. 119 million market cap. If I saw some insider buying or something, that's when I kind of want to see something happening. Let me just pull up the remind me this. I want to see the product. Who owns it? T. Rowe Price or Atlas. Atlas was one of the ones that did the offering or whatever they did for it. Down to 10% now. T. Rowe Price, 18%. Interesting. Anyone else own it? I'd like to see someone else get involved with a company like this. Hey, Alan Weber, you like this? Oh, he's in it. He's in it. Oh, I could have just scrolled up. Wow. Look at it. He's been in every single one that we've pulled up. And not a huge position, but still. That's funny I said that, huh? Jeez. That's crazy. Not a huge position. But yeah, Atlas. So Atlas has been selling the position. Now, I was going to say 9% sounds low for them. Core Partners, T. Rowe Price, Osterweiss. Yeah, preferred notes. I think, is that what PRN is? Preferred notes? If we pulled up the balance sheet. Oh, no. All right. No preferred stock. Oh, common stock warrants. Exercise. So they got warrants. Okay. Okay. All right, it's on deck. That's good enough, I guess. Keep an eye on the. I don't regret not buying it though. I know I see it's up triple, but I don't regret not buying that. There's plenty of stuff that was cheap. That wasn't one that I wanted. It didn't get that cheap. I felt like it should have sold below $1. It's pretty impressive it didn't get cheaper. All right, I'll keep going. Oh, let me switch back. All right, I'm usually pharmaceuticals. What I can also do too, right now I'm going through robot. What I can do is export. I'm not going to do it today. I'm just going to keep doing what I'm doing. But I can export the top movers or top decliners to a CSV and then upload the CSV to stock charts, and then I can screen the day based on a chart. And then if a chart looks compelling, then I'll go look into it. Like right now, so this is a good thing about Open Insider. Check this. Like if you go to Open Insider and you're seeing who did what today. Oh man, USA Truck bought again today. Are they in the Roaring Kitty portfolio? Sorry. They're in the Roaring Kitty. They have to be. But it used to be a bigger position. Damn. It's tripled, I think. Wait, how they buy at 684? If the price is at 11, what's this? Oh, was it like an average price or something? Ah, man. I think it's in the wrong. We'll check. Okay, but if you're looking at Open Insider screen, this is one thing we were looking through the other day, the Insider Buying tab, and I don't have this, but if you go through and you can see the chart, this is sick. Anything look interesting? Like this doesn't look that interesting. This doesn't look that interesting. This looks great. Damn. I think it's in the portfolio. I actually have to check now. I don't think I would have sold out. I think I was getting a little bit nervous there on its behalf. Wait a second. Oh, that's a different one actually. Wait a second. Oh yeah. Wow. Ah. This one was risky. This one was I was right here. I thought it was starting to look interesting. I was kind of testing the support, and then when everything started headed south, I thought it might have been in trouble. Look at that. Do they publicly traded bonds? Is this another missed opportunity? Should I add it? Wow. It's real. It's a pretty small company. Sorry. Yeah, how do we... Okay, I just came across it on the insider stuff. That's right. What's the market cap? Yeah, super small, right? Wow, trucking's bounced back. Nice. Wow, trucking. Can I... Actually, I think I got it. Watch this. Oh, I don't? Hey, there it is. Must have misspelled it. So what's this? This is industrials generally. And then we got transportation. Looks good. Looks good. Transportation index, a different is that, it's like a Dow Jones type index? Forget. Old Dominion. Look at this bounce back. Old Dominion, almost a double. It's a bigger company. And here's so here you have this is just the number ticker, name in the industry, or I think I use sub-industry here. And then that's the market cap. So 17 billion market cap, big company, almost doubled. Wow. JB Hunt. So this is good for like when an industry catches, when I'm like, oh yeah, what's this industry doing again? This is what the chart's kind of helpful for. I think I can also back out to weekly. What is this? This is daily. But what if I wanted to do weekly? I must have weekly somewhere. Maybe I don't. JB Hunt, 10 billion. That's looking good. Night Swift. All right, they're all looking good. I mean, that's nothing sticking out. What I would like to get to are the ones in particular that I was strong bounce back. It's only a couple pages, so I'll be quick. Ryder. That's a moving company, right? I don't think I bought them, but they looked interesting. I thought people might be moving. Car, yep, rental cars. Boy, that's holding up pretty well, ain't it? Considering Hertz. Okay. Oh, and there you go. There's Hertz. Wow, that's holding up well too, considering, huh? It's still a 500 million market cap. 500 million. Is that up to date? No, this might not be up to date because this is the market. This is a label. This was what the market cap was when I added it. So now I'm curious. What is the market cap for Hertz? I'm not so sure. 214. Wow, it's only half that, roughly. Right. So I knew that. I knew when I was adding the market cap, but when you're getting through the charts, I need some data in there just for a little bit of context here. And I knew they would be outdated, but I thought it's fine. It'll be close enough. I just wanted them sorted by market cap. ARK Best, this is a good one. I was very closely watching this, and it only didn't make the cut because it wasn't cheap enough. I wanted it below 10. And it got down to 16, and I'm thought, what the hell is it doing? Like, come on, keep on going. It really bottomed out. There's definitely a lot of demand there for those shares between 15 and 20. I wanted to buy it. And I'm not surprised. It's only doubled. It's not even doubled. It hasn't even doubled, which kind of justifies my my thinking there is that it never got that cheap. And so far, maybe it doubles again, and then it's a 4-bagger, you know? But it always see it's got some solid support here. See this? Look at this. And I kind of knew this. I knew this, but at the time, remember, so much was moving in March. But I thought, no. I see this. I see the support, but that's not attractive enough for me. Sorry about that. This should be on vibrate. And so just relatively, it's all relative, right? It's not about absolute. And so relatively speaking, I didn't think it was as attractive. And so far, it seems to be. There were other trucking companies, too, that... let me just do the 10-year. Yeah, look at that. Like, right there. Right there. It briefly got down below 15 that week. Or was this monthly? That month. But good. Technical analysis. There you go. Universal Logistics, this one I owned. This is the one I wanted to see. USX. What? I sold out of both. The only thing I can think of is that with a position like those, and let me see. How can that be? How did I sell out of that one? Is that I may have had let's watch this chart. Let me close out of some tabs here. A bunch of them. Is that I stop loss? I think I might have got stop. So this chart didn't look that good. But there's heavy insider ownership, and I believe the owners are even the founders. And I thought it was a bit overdone right around here. My average price was probably around 4 to 5. And then the chart started to look like it was turning around, and trucking the industry was kind of keeping it together, but kind of not. And then the chart was kind of looking good. If we switch to, this is weekly. If I switch to daily, the chart was kind of making its turn. You know what I mean? In August there, and it was kind of looking up, and I thought, okay, so this position's gonna work out, and I had it. I may have even had it right around here, and then I probably had some stop losses in there because I'm like, oh, if this trend breaks down, I'm gonna be it maybe, of course, a lot of trends broke down, right? But damn, I'm kind of surprised I didn't have more trucking exposure. If I sold out of both of those, what trucking exposure did I have? Do I have any trucking? How could I not have trucking exposure? I'm trying to think. Wow. Seems like an oversight on my part. Let's make a note of that. Oh, did we have any other missed opportunities? And not so much Civio. I mean, we have stamps. There's so many missed opportunities that it's almost silly to list them. But we mentioned stamps. We mentioned, I don't know, Civio's not a missed opportunity. It just doubled. That's nothing. ArcBest, also not a missed opportunity. USAK is, though. I'm going to list both those. Trucking allocation in March. Maybe it was a sector. Maybe there was a sector concern or something, but that doesn't seem like something I would do because I don't care. Like, I know there's certain sectors and industries are going to struggle because of all that was going on, but that's the play, is that they won't, like, I don't usually make bets on that, like, to say, like, oh, trucking's going to get smoked and it's not going to bounce back. I usually won't say that confidently because I'm not an expert on trucking. I'm not a super expert on any particular sub-industry. I'm more of a generalist, which, for better or worse, I'm just saying. And it doesn't seem like I would say, well, trucking's not going to be able to bounce back and all this, but I would buy every other industry. You know what I mean? I was in so many other industrials and materials that, I mean, I feel like that's an indication that I wasn't thinking that. I feel like I got stop-lossed out of both of those, USAK and USX, and with all that was going on, I missed it. That's the thing. And then I had so many positions. Keep eye on stop losses. I mean, it's not a big deal because keep on stop loss triggers. It's tough as an individual investor. What can I say? With so many positions, that's another reason to have fewer positions. But I give myself a pass. No big deal. But check this out. Pull up the DEF, the proxy, and look up USX. It looked real interesting, and were they actively buying too? I feel like they were, like, this whole time, which I really liked. Like, they owned the company and, like, founded the company. They were still buying. They even bought in May, $4. Oh, that's an excuse. Why didn't I buy in May? I saw this 340K. Just because I had so many positions, that's why. Max Fuller. So it's the family, the Fuller family. He bought in May too. Props to Max. He knew what he was doing. He knew what he was doing this whole time. It just took a little bit of time. And Eric, I think, is the brother. If you can't, he can't. Actually, I gotta remember to scroll down so you can. Eric, he was the brother. He was selling some last year, but just a small. Yeah, I think the family's owned it for a while or even found it. I kind of forget. But a lot of the stuff, you know what I mean? So a lot of the stuff I like to see. Damn, missed out on trucking. Okay. All right, so why'd this come up again? Trucking? Oh, because we like the Open Insider. See, I opened up Open Insider because looking at the charts and stuff. So USAK was even more speculative, unless like surprised by that one, because that one was looking rough. Look at this. It got down to, forget this one. It got down to okay, not as cheap as I would have thought. For the longest time it was at 7. So it got down to 3, then it tripled or so. I should be tracking it though. Let me just make sure. I got USAK and on deck. Okay, and I have USX. Yeah, okay, that switched to yes. Okay. Oh, wait, how come this is blank? That's gonna fix, right? That should say yes. Okay, but that's okay. So watch is on the yes. Okay, so I was tracking both of them, and I had USAK on the on deck as opposed to on the watch list, right? Because it was I thought it was a little bit sketchier. I remember the insiders had very little ownership of the company too, whereas USX had quite a bit of insider ownership, and so I just thought the whole thing was precarious. I'm okay with that one. Anyway, that's going off on a tangent there. Okay, AMC. So let's keep moving through. What time was it? 9? We're not even through the gainers. That's okay. We're testing a new approach today. AMC. These are the movie theaters. I'm kind of like you'll see me skip over some. That's because I don't think that owns $3 billion. Is it healthcare? Technology, right? The light green is technology. $3 billion. I don't have much of an edge there, unless I saw. like things are so undervalued right now. I'm not really looking for trendy type stocks necessarily. Although this one looks good though, doesn't it? Plus we're running out of time. Oh, that looks real good. Whew. We don't have time. I don't have time for that type right now. But okay, AMC. These are the movie theaters, as opposed to AMC X is the channel. Was that Walking Dead? Is that Walking Dead? Yeah. So this is a popular COVID play right now. Like a movie theater's gonna open back up and they're gonna crush it and stuff. I don't know. I think all these players are heavily leveraged. This isn't a huge move on the chart. It still looks bearish. I've looked at the fundamentals recently. I'm not tracking it right now. It seems like it's going to be tough to bounce back because of the debt. But maybe I'll take a peek. I got it on the watch list. We'll take a peek as we keep on scrolling. Nothing urgent. But market cap 500 million. All right, that's still holding up pretty well. Revenues 3.7 billion. Good, still good size and everything, and not super cheap though. 7.5 times price for the sales to price. Anything else? Nah, nothing else. It's more just a play on movie theaters and stuff. Could be something there. You know what? Like, can I see this chart just back it up a bit? Doesn't look that good. Give me a couple more months. I mean, that's why it's on the watch list. You know what I mean? Let it level off, and but as far as a strong bounce back or something. What was it? AMC. Oh, is it already there? Sir, come on. Oh, did this jump? Bummer. All right, I gotta fix that. It's kind of bummer. All right. Luna. Don't know these. 6 billion, 200 billion. What's this? Tech, 200 million. Electronic equipment. Okay, that one's interesting. Revenue 74, really small. What's the chart look like? I don't see insider buying right here. Unless the chart looks good. I don't know. Oh, that looks good. What do they do? I don't have it. Fiber optic sensing. I don't have much of an edge here, you know. I would pop it open in the fundamentals if I felt like it. I don't feel like it right now. Looking at a lot of companies, right? And but I'd look at if it looked cheap on the fundamentals or something, and then it looks like a trendy stock. It could be one that I add to like that the trend list maybe. But not right now. Should I? Let me see that one more time. Wait a second. Nah. Nothing super compelling when I look at it. What's this? Fertilizers. I don't know this one. I know all the industrial, most industrials and just about all materials and energy companies, but including fertilizer. There's a $200 million market cap fertilizer company that I'm not too familiar with. Oh, Bio Innovations. Oh, what is it? Discovers, develops, produces, and promotes biological products for pest management, plant nutrition, and plant health. Oh, okay. Products include regalia, a plant extract based. It's not cheap. It's not cheap on any metric. I mean, nothing's lighting up. 50 million. Oh, I had the wrong one. Was same point. Nothing highlighted up. Revenue's 30 million. One of those like the bio type materials companies. That's not really my type of materials company. No insider buying. All right, keep on moving. I'll take a peek at the chart. I like to pop open the chart, you know, because that tells a story. Sometimes it tells a story faster than looking at everything. I don't see much. Joint Corp. Biotechnology. A lot of biotech. If I'm going to come across a biotech firm, some other way, not based on daily moves, whether it's someone I respect talking about it. And there is one firm I track. Was it Perceptive Advisors? Are they here? They're like I believe they're a prominent like healthcare type specialist, where if sometimes they take a peek if they're investing in a biotech. I've just read some things that suggest that they might know. It's the only one that I would track. So like in March, I was looking at what they were holding and kind of just buying what they were holding because everything was selling off, right? So it's almost like you could just pick up anything. So I'm like, all right, I'll pick up some other stuff. But right now, hey, First Solar up again, huh? Didn't we just look at that one? Why do we? I forget why we're looking at it. Oh, up big today. What's the date today? Okay. Yeah, not tracking it that closely right now. Seems like it should be on deck, though. Let's toss it on deck. You know what I mean? That's something that, I mean, 7 billion, it's not really my... But it's one... Do I want to put that on deck? Nah, I guess not. More like a pulse type thing. I'll add it to pulse. Let's see how quickly that gets added to the universe there. Does it? Yay, that's quick. Let me add it to pulse. Yeah, I'll add it to on deck. And pulse. That's all I'm going to add. I don't really care about the rest. Wisdom Tree. This is another trucking company. This one I will... Oh, and didn't they just have a strike a deal with the U.S. government? This was on my list. It never looked that great though. It's kind of the fundamentals were sketchy, and I'm like, but it was worth the trade right here between $1 and around $1. Yeah, it's just the fundamentals look really suspicious and sketchy, but it should be. Am I tracking it? I should be tracking it. See the market cap 360. Are they really gonna pull this off? I kind of just figured they were gonna go bankrupt. Oh, you know what? This isn't the one. YRCW. YRCW is the one, which we're probably going to see on the list because it appears as though all the trucking companies were up today. But Desek usage, or however you pronounce it, Desek, I don't know. But it should be in on deck. It was just another trucking company that if you were doing a diversified play, which is probably what I should have been doing in March, then yeah, let me just toss that on there. Taking a while. Did I check it? I'll get there. Wow, a lot of things up. DBI. This is in the portfolio. Oh. I think DBI might be an ad. Didn't I have it under ad? That's not a big jump, but is it looking good? Everything was up there. So when I see everything up this much, I'm not thinking, oh, was there news for DBI? Maybe there was, but maybe there was. But it just looked like everything was kind of just like a value day. That's why value was up. We saw value. Oh, they did announce that. Designer Brands provides... that's DSW, right? DSW? Yeah. Steps taken to enhance the financial flexibility, including... I'm glad we pulled this up. Replacing its $400 million. Can you see this okay? $40 million revolving credit facility with an equally sized asset-based facility and completing a $250 million privately placed secured term loan. Term loan, good, okay. Privately placed, good. Since confronted with this, today's announcement represents another critical step that increases in the face of adversity. This might be an ad. Taking care of their financial situation. Wait a second, is this separate? What is it? Okay, a new revolver, a new secured term loan. The term loan matures in August 2025 with certain affirmative negative covenants. requires limited blah 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 was aged by 6th Street. As a result of the action we've undertaken with our lending part, we are confident we have sufficient liquidity today. I think there was some concerns about the liquidity. I didn't have it as much, but I mean, I've been wrong about that. But restructuring, as previously announced, the company implements an internal reorganization reduction. Okay, so you get a different type of restructuring. Effective July 30th. Eliminated a bunch of positions. It sucks when a business has to do that, but sometimes they literally have to do that. Designer brands, like annual cost savings, store update, any outlook, please. Represent 99% of the company on board. Management will reopen. We are pleased that the store locations across North America are continuing to reopen. There's not much in here else. Okay, but important information. Is anyone saying about this? Saying anything about this on Seeking Alpha? Let's see. Value the catalyst. No, see, no one's really saying anything about it. I kind of like that. Sometimes I like that. I always like support, outside support. So you know what else can be good too? If we go to not going to see anything. Briefing. I'm just trying to see if anyone's commented on it on Twitter, you know? It's all the bots. I think I mentioned this. I have muted these and blocked these in the past. Talking about layoffs. No one's really talking about it from a security analyst standpoint, you know? New insider filing. What's that? Is anyone buying? Yeah, so look at this. Yeah, that caught my attention too. Dropping $1 million. No big deal. In March 18th, they nailed it. I think that was the low. Did they think so? A couple management teams nailed the low. It was really impressive. Let's check. I bet DBI bottomed on March 18th. A lot of my positions did bottom on March 18th. Nailed it. They got it below 3. Oh, isn't that awesome? That's so. It's badass, ain't it? And things bounce back so strong. I mean, that's not that big of a jump, but they bounced back strongly midday that day. I was saying this in one of the other videos. For S&P 500, the bottom was March 23rd, but for a lot of value stocks and value type industries, it was March 18th. The morning of March 18th was I've never seen panic to that degree before. It was the prices were nuts. I mean, not so much for DBI, but there were a ton of positions in the Roaring Kitty portfolio that were, like I said, indefensibly cheap. Like if whatever capital you had, you should be throwing it at those positions. Yes, it could have gone down, and as it turned out, everything bounced back strongly. Right? It's easy to say in hindsight, but I was saying it at the time, and I wish I had taken more action, specifically in the 18th. But you're trying to spread your decisions over time because you don't know if it's going to be the bottom and so forth. But specifically, that morning of the 18th was something to watch. It was just the price act, it was just it would look like the bottom had fallen out on all these names. And some of the management teams took action that morning. And there's a couple other ones too. I can't remember. I thought I can't remember off the top of my head. But if you do a search for trade date March 18th, and you're going to see it. So I like to see that. And that was part of my bullishness on DBI. It was the chairman of the board, CEO, dropping this much money, perfect timing. They're going to try, you know what I mean? And, nice work. Okay, but so no one's saying anything. No one's saying anything about it on Twitter either. See what I mean? Like, this is why Twitter can be good too. If someone just starts talking about it. So this Tristan's clearly just reporting on the industry, on job cuts and stuff. We've seen a couple articles on that front, but no one talking about it, you know? It's, strange uptick. Good. It's not 100% good, 100% bad. I kind of view it as a little bit good, but at the same time, I do like people who share my viewpoint if I respect their analysis and stuff. I don't see anything. Where are we now? July 24th? Nothing. Past month. This means people have kind of stopped paying attention to it. Just traders. I hope you don't mind me scrolling. I'm legitimately looking at these to see, because I think it's going to be an ad. All right. I don't see anything. Zero people talking about it. No recent insider buying. Could be business reasons for that. All right, but let's check this. Any update? We're going to get the updates next week, so that's something we're definitely going to do next week. They're all, a lot of the hedge funds are going to be filing their latest, was it 13F? And we'll be able to look at a lot of people's updated positions. Many of them have already written their quarterly letter, so you've kind of gotten some insight. We mentioned Einhorn's letter last one. He got involved in tech and stuff. Tech resources, not technology. Isn't he bearish on technology? I think he is. Who owns it? Oh, he owns 21% too? He's the chairman of the board and he owns 20%? Whoa. I mean, I knew this at one time. I forgot, but when you know what I mean, you follow so many companies, I can't remember these details. That's why anytime before I make a new decision, I have to revisit everything. Plus, it's good to get updated information, you know? Wait a second. Now we need to check the proxy. Did he found the company? That's weird to see 20%. DBI is kind of a big... What's the market cap? Oh, $500 million. DSW, huh? You shop at DSW? I've been there. They got, lots of people sell footwear, but that's a prominent one. Did he found it? Wait, I got the wrong. Yeah, May 20. This is it. Okay. I forgot this. This is good. Oh, so you can see I clicked there before. He owns. Oh, they got the dual classes. Not necessarily about. Oh, first of all, we need to check this off. Did I already check it off? Good. Assuming it's even working. Damn. Let's hope the other one's working. Let me close out of it. What a drag that is. Look at this. Dual classes. Schottenstein. He must have founded the company, right? And then he owns control. Okay, so this guy controls it. Gotta look him up. He was chairman of... Oh, did he found... Okay, let's see what he did. Since 1980, he has served as chairman of American Eagle Outfitters. Wow. All right, he's got experience. And American Eagle has obviously crushed it since the 1980s. He has served as chairman of DSW. Whoa. All right, uber wealthy family. I haven't even heard of him. Have you? Personally owns about 3% of American Eagle. American Eagle looks interesting too. I was buying that. Whoa. Okay. But they're not a founder, huh? Just chairman? A chairman of a board for a couple of these companies? That's kind of impressive. Okay. But knows his shit. You know what I mean? How did he get control of DSW? That's what I mean. Like, how did this happen? Did he just keep on buying? Like, is there a history of... Holy shit. Is he just buying the shares? He was buying up at $28. This is good to look at. It's good to look at historical purchases because you can see how wrong people have looked or how right. And there's one... There's some firms out there where if you're keep an eye on the particular management teams who know the good times to buy and stuff like that. Whoa, he's just been buying it up. He bought up control. He's been involved. Look at this, all the way back to 2005, 6 million, 3 million. Looks like pretty good timing on his purchases though. Check this shit, huh? October 2008. Nice job, Jay. August 2015. Let's take a peek. This is kind of fun to do. Fun, right? August 2015. All right, so it's kind of selling off. $23. So you can probably. Oh, okay. This guy, he's in it. He's not messing around. You know what I mean? He's got a reputation. He's got a reputation to uphold a bit. You're chairman of the board. This is what I mean. I like to see this stuff. Like, he has a reputation to uphold. He doesn't want this company to go bankrupt on me. So no shit, he's making sure that they have their financial situation covered. And the other thing too is, so I don't know if it's something. It seems like, well, what's this? Schottenstein. It's good to see. So this guy clearly controls the company, right? I've seen this before where they'll control like a retailer. So there was a similar. That was more of a family. So there's Skechers, right? So Skechers is owned by a family, Greenberg. I want to look this up. So sometimes you'll come across a company with dual classes, and they're entrenched and they own they have control of the whole company. Beneficial. Am I spelling it wrong? I probably just Greenberg, 82%. See this? Okay, so this family controls Skechers, right? And they had control of the company. But if you looked at how Skechers had historically performed, excellent. They kicked ass. I was looking at it in like 2011, 2012. 2012. I mean, it was trading at. They've since done a stock split and everything, and the stock has crushed it. But it was trading at. It was way cheaper than this. Way cheaper. Right here. It looked tremendous. Okay. How far back am I going? Give me 20. I want 20. Okay. So you had 2003, right? Then it sold off here. Then everything was cheap. 2008, 2000. I remember, you need context. And then it traded out here. And then there was concern because some of their popular things were just too. They were trendy, and the trends were gonna like no one's gonna like Skechers anymore. Blah blah blah. Right? But then you look at how Skechers had been run fundamentally, right? Like return on equity, how equity had grown over time, their management of net margins and stuff, and they had kicked ass, like undeniably. Forget the stock price. Just forget the stock price. And so I'm like, this family still controls the company. Like they have known what they're doing for 20 years, even though the stock price has been all over the place, right? And I think this is sick. So I got lucky, right? It's buying right in this range. It was trading below book. This is all off the top of my head. I'm fairly confident. Now it's nowhere close to that, I bet. And this is it? I think they even started paying a dividend, so let's undividend it. Holy shit. Oh, this is because the stock split. There was a stock split. That's why that's like that. So you can't be messing around with that. And then, yes. But anyway, it was 10x. It was a 10 bagger. A friggin' 10 bagger from the lows. And so other times I've seen companies run by families or entrenched and everything like that, and I think and they have the dual classes. I think even Skechers has the dual class. Yes, Class A. So it's not always a bad thing, you know what I mean? And sometimes now I like to see it if their reputation's on the line, kind of like what we're seeing with designer brands. And anyway, Skechers was a huge win, and so I always think of them when I think a family that owns it and controls it and had a history of success. So that's the thing. Did DBI pull up? Let's see, sick. Okay, so we got $3 billion in revenues. Look at historical trends, doing a good job growing. Doesn't mean it's been good growth, but then I look down at equity growth too. This is really damn good. So a lot of purple and green down here. This is book measured ROE. If you want, I think I was defining this, but I actually had a definition here. So this is accrued book measured internal rate of return. So you got starting book value, and then each year you add a dividend and the book value per share growth, and then it kind of calculates what that IRR is, and then uses. And so it's like, and it's not perfect, right? Because true book equity growth is by the quarter. I mean, it's really daily, right? But we have quarterly financial statements. So, but this is by year, very crude, and it gets wonky due to buybacks and stuff. And there have been some for DSW. But anyway, a lot of purple and green. That's all you need to know. This is good. It means it's generally a well-run business. They've been doing a good job growing equity, and then you can see revenue growing too. Now equity hasn't been growing as well in recent years. Could be the whole brick and mortar argument. People are bearish on brick and mortar. Maybe people aren't shopping there as much. There's been a large decline in trailing 12-month revenues, which is even a little bit before the pandemic. You know what I mean? You only had a month or two of the pandemic in here, but still, $3 billion in revenues, good-sized company. And then how's the leverage? A lot of this is going to be leases. So I'm not too concerned about that. And then, but I would pull it up. I need to pull it up to see what the actual breakdown is for debt. Look at this. They had no debt before. All right, now I got to do this. They had no debt before. So this is solid equity growth without any debt. And then what was historical earnings? Look at this. They had a solid, they were profitable in 2009. How the hell did they pull that off? Couple of losses here, but small. Okay, so this is this is a terrible year, but still positive cash flow. Oh, I'm liking this more. This might be a bigger position. Bought back shares past couple of years. I assume at higher prices. You know what I mean? I don't know what price point they are, but now we know where the share price is trading right now. So whatever they were buying those prices back, they were at multiples of what they are right now. So it looks dumb, but look, I like to see the positive cash flow for the. I know retailers, they tend to be able to pull this off, but every single year, positive cash flow. Okay, operating cash flow just for starters, right? Just for starters, because if you can't get a positive operating cash flow, you know what I mean? Then that's super risky. So then we get to simple free cash flow, right? Still largely positive, generating over $1 per share. What's the share price? Now it's up to 7. I remember when this was trading at 3. Was it? And this chart's looking okay, right? This is why it's kind of been on my radar recently. I think I added it to the Roaring Kitty buy. It's been kind of just lagging a little bit, but I think sorry, this damn thing. So book value $5 though, right? So it's trading above book value. But simple free cash flow, still $1 per share in free cash flow right now. So now it's kind of a question of, is this sustainable, right? Can they get back to previous levels? Oftentimes you just need a sentiment shift. But that's a long period. I mean, this has kind of been a good time for these. Oh, wait, what did it do in 20? There was a sell-off in some of these types of retail. If you check American Eagle and stuff, they kind of got their ass kicked. Watch this. Right here, they were cheap. These companies were cheap from May to right here. Because and same thing for enough. Watch this. They were literally. I don't say that often for these companies. That's right. And that's what I mean. They're kind of cheap right now, assuming people continue to shop. But actually, DSW held up pretty damn well, relatively speaking. So it's trading even below those prices. You know what I mean? Just a quick sanity check. In net cash flow, remember I was saying it's a little bit of a more conservative, a little bit lumpier too, because they don't have many acquisitions, but they're still, so $2 in net cash flow, that's legit. That's legit. All right, let's pull up the cash flow statement. Damn, we come across, well, that's the thing, because we come across a lot of good companies today. I haven't dug in deep into them in a while, and so it's good to pull them up. And I know it's delaying stuff, but it's good to get brought up to speed on them. So let's check this out. I know we're missing a quarter. But this will still be helpful. So we're seeing operating cash flow, a pretty solid, stable figure. I mean, this looks semi-regular, pretty consistent. Loss in equity investments, I wonder what those are. Pretty small in the grand scheme of things, but like, what are their equity investments? I don't even know. But kind of small, so not worth digging into right now. Impairment charges, who cares? I assume they're all being... Does it still have goodwill? There's still a little bit of goodwill. That'll come off. That'll come down. I see book value of $7, but 10 to book... well, give it time. Okay. All right, so and then this is just working capital changes. On average, you can see like it's pretty stable. On one year you'll have one up, on another year you'll have one down, but it averages out. That's why I'm using whatever I'm looking at. You'll see me use CFO average 3. I'm always using 3-year average operating cash flow. You have to, at the very least 3. Okay, so now we have our capex. Boom, available for sale investments. No one cares. That's just how they're managing their cash position. Sales available for sale investments, same thing. Ignore it. I mean, I'm not saying ignore. I just mean it's not relevant to managing the operations. It's just how they're managing cash largely. What the hell's TSL? Why is this an investing cap? The cash outflow for a loan supported by a promisor? I don't know what that is. Oh, it's so small though. No, what's this? I have to look this up. 57 million in the investing section. You know what I mean? Usually, it's not something weird though. Equity investment in ABG Komuto. I don't know what that is. Working capital proceeds received for business. Oh, they did have an acquisition. I missed that. 200 million. Okay, so that's why they had that huge net cash flow, negative net cash flow this year, because it was an acquisition, which is fine. But still, figure, so you see 200 you could just take the average of this, right? I'd just say 150. 150. Just quick. You know what I mean? Just, okay, 150 in operating cash flow. What do you see here? All right, 75 million. 75 million, 80 million. So figure probably have 75, 80 million in free cash flow, roughly past 3 years. So it's not saying that that's what's going to be in the future. And then divided by 72, you're looking at about a buck in free cash flow, just roughly speaking. Some of that CapEx is growth CapEx. Perhaps they've been growing, so we can actually say that. I mean, I know this year decline, but you know, CapEx can be growth CapEx, maintenance CapEx, right? Maintenance CapEx is what you should care about. Many times, it's mostly maintenance CapEx, and I won't get into it, but usually a good chunk of it is maintenance CapEx, but they try not to get into it, right? But in this case, DSW has actually been growing, and there haven't been too many acquisitions. Right? So I got to scroll over. Sorry. I got to clean up this. Where's acquisitions? Right there. Very, very little acquisitions, okay? Except that big one last year. I got to look into what that was, right? But not much. Not much. So that means this growth has been organic. And so that's what I mean. Some of that CapEx was likely growth CapEx. So anyway, we're looking at about a buck in free cash flow historically. They've been buying back shares. I mean, this definitely deserves to be in the portfolio. I've seen enough to think this company deserves the portfolio. You see what I mean? Like we got was he the chairman? No, that's Skechers. I forget. Was he a CEO? Look at this. I already forget. What was it? I lost it. He's both. Yeah, chairman of the board and 10% owner. He's not the CEO, but and the CEO is buying some too. So I've seen enough. Like that's a lot of insider buying. He's got control of the company. Seems like he has a reputation at stake. He has a history of success with American Eagle. In here too, I mean, some solid growth and some solid equity growth. I mean, solid revenue growth, but then some solid equity growth too. Historically, seems like they're stumbling a bit right now. I mean, sub $4 seems like that was a bit ridiculous for a share price. But even right now, it does seem a little bit cheap. It seems even cheaper off the top of my head. I was thinking that American Eagle and Abercrombie & Fitch and Gap, I didn't think they looked super cheap. I think, again, I need to pull those up, but off the top of my head, in the interest of time, I believe this one looks cheaper. That's why it's a bigger position in the portfolio. But I like I wouldn't say there's a tremendous amount of margin of safety here. Below $5 would be great. But the chart kind of makes up for it. You know what I mean? I like what I'm seeing on the chart here. Also, the upside potential. I'm not saying $30 is fair value, but if I had to put fair value in this, let's do it real quick, right? I mean, we've been trying to do that. This one's a little bit cleaner to do fair value at. Market cap of 500, by the way, that's a good size market cap. And I'm just looking at some of the multiples here quickly. Sorry. Yeah, I've got over $1 million in insider buying by the chairman. Sales to price. Not super cheap on that basis, but that's not super cheap on that basis. And I do like that one. I do like price to sales. And when that trades in the gutter like GameStop. GameStop, like enterprise value to revenues isn't like less than 2% or something. Something crazy. Talk about operating leverage. Cash to price. It's got a good amount of cash, huh? Oh, and does it have any debt? Sorry, I mean, well, we know because they just did a term loan. But is this it? Balance sheet. What does that debt look like? What is it? Okay, accounts payable, blah, 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 blah. Debt. That's it? 200? Did they just refinance it? Is that what we were reading? And see, so it's mostly lease liabilities. Like, those shouldn't be there. Those shouldn't be on the balance sheet. And at least for my spread, at the very least, they shouldn't be classified as debt in my data, but I can't unwind. They need to change it. I talked to them about it. Wow. Okay. What was the? Wait, didn't we pull up the news release? Where'd that go? Sorry, I know I'm all over the place here. Let me clean up. Oh, I thought I did. Did I not open it up? No, I must have closed it. Good thing I got those links, huh? Raises new 250 million, and they use that to pay off the old one. So to enhance, okay, so it's definitely got plenty of flexibility here. So any liquidity concerns, which I thought people had expressed liquidity concerns, including replacing its $400 million revolving credit facility with an equal sized. All right, so I got the revolver covered, and the new term loan will be used to increase liquidity and support. 2025. All right, I like the balance sheet. This is a good looking balance sheet, and I'm glad this is taken care of. The stock does. I mean, I know other stuff was jumping today too, but this definitely deserved to jump today. Kind of getting this taken care of. It's reopened 99% of its North American stores. It's good to know. Just for taking the pulse of everything. Yeah, it's anything else catching my attention right off the bat? Yeah, not a tremendous margin of safety. Really, you wanted that at $3 or $4, because like I said, if you get up like $1 in free cash flow per share, maybe $2. I know we're seeing $2 down here. I do like to see $2 rolling 12 months. I'd like to see $2 in net cash flow per share. I like to see that. That's solid. And then if you take the average, because it's adjusting the share count. Damn, it's adjusting the share count because of those damn leases. But a history of check out historical earnings. I think I mentioned this. So, damn, these are I need some. Can I default? I need something to say. Ignore that. I thought I had this. Oh, I need to fix that. Sorry, I needed to fix that so that when I say true, it should fix the share count issue. So if a company is being falsely classified as levered, which it is the case you're seeing frequently with retailers, because and I just broke it. See that when I make changes to the spreadsheet too, that seems like it's been breaking. It's something for me to look into. What a drag. All right, I think I've seen enough though. And this chart's looking good. Wow, it's just a kissing 10. Didn't quite hit it. Yeah, I like this. I think I like it more than the other ones. And where's in the portfolio? That's higher than this, isn't it? Sorry, scrolling slowly there. Oh yeah, this isn't sorted by size. Sorry, I was gonna say. Sort by 2. GameStop. I'm thinking about buying more GameStop, by the way. See it pulled back today? I didn't add this week, but we'll see. Could it get back under 4? That'd be nice. Let's see. I think if it gets back under, I think it might. Anyway, I'm getting sidetracked here. It just popped. Oh, it's because it's bold. Let me unbold this. I bolded it for the video. Get my attention. Oh, DBI is not in the top. Right, it's because it's down 0.6%. Yeah, I think I'm gonna up it. Where is it? I'm wasting too. Look at this. Yeah, that's too low. I think I'm gonna up this. I think it's more attractive than many of these names here. That's how it's always supposed to be, all relative, right? So if a stock looks good, it's like, does it look? I mean, really, what we would do is go through each one of these. We're not going to do that now. There's a case to be made. There's too many positions. I know that. But off the top of my head, it's definitely more attractive than some of these because some of them are trendy. Like at this point, I'm not so sure how undervalued MHO is. That's had quite a run. A lot of the home builders have, but I've been riding the wave, and I've profited because of it. You know, like I've dragged my feet. It's worked out. But other ones, I think I'm gonna up it. Yeah, I'm like being reminded of some of the characteristics that I like, and then they just. That news release today is good. That's the type of stuff. Like I'd like to see something fundamental, some of the fundamentals improving. It's not super cheap. It's not like go super heavy. This isn't a recommendation, of course, right? Everyone has their own unique investment styles. I'm saying specifically for the investment style of the Roaring Kitty portfolio, that it kind of makes sense to add based on the characteristics I'm seeing. So that's kind of exciting. I mean, so many positions, right? But it popped up on our radar today, and it caused us to dig deeper. That was like, that was good to run through that. Is there anything else that I would check? That's the thing. So no one's really talking about it much either. I think people, it's a weird name, designer brands. Like, no, do they have other companies too? Besides DSW? Shoe company, shoe warehouse, but it's mostly DSW. Yeah, I've been in there. And again, it appears as though it's historically well run. That's what I like to see. And so there's a question of, is it going to bounce back? It might not. Maybe no one's going to shop at DSW anymore, right? But I think the odds are tilted in its favor. It looks like a pretty solid double to me, even from $7. That's what I mean. I like triples in 4-baggers. I like 3 to 5 baggers. And it may be a triple. Don't get me wrong. I mean, you see, it was trading at $30 less than 2 years ago, right? So it's not like it's crazy that it could be a 4-bagger, right? It's not crazy. That's what I mean. If sentiment just changes and people start liking it again, that's totally possible. But I'm talking about trying to be conservative about this. And conservatively speaking, $15, and then thereafter, you'd really need that's more of a turnaround to get back up to those levels, because I feel like those are lofty. $5 would be nice. A pullback would be nice. I still think it's worth adding right here. And what's the RSI doing? So this is a good time to look at the RSI. It was overbought a bit. What price was it? That was 2018. So the weekly's turning up, still in the middle of the road. How about the daily? All right. So this is what looks good here. It didn't quite get overbought, which a lot of stuff did get overbought, June 8th. Why didn't this one get overbought? You know what I mean? But it come down. A lot of stuff came down. You see this. We've been seeing this a lot in charts where the past like 6 weeks since that little mini run in value, things have kind of flatlined. But this is good. It never got oversold crazy. And I've seen this for a number of stocks, and this looks good to me for the types of stocks that I invest in, because it makes me feel like the trend is still potentially in my favor. But see, the RSI kind of held it together, never really got overbought. Now it's starting to turn back up. You certainly hope it gets back to an overbought range again and it starts coming back up. It was just at $15 this year. Are people going to be shopping at DSW? That's the fear, right? People's like, oh, no one's going to shop there anymore. They're legitimate concerns. I can't counter that. I just base it on the numbers and the characteristics of it. It's more difficult when you start trying to have those discussions. Like, yeah, people. But it seems like a worthwhile ad right here. But even more so below 5 and below 4, obviously. I guess that's obvious. But because I really like a real big margin of safety. Like compared to what I would say GameStop, it seems like there's much more margin of safety there. Although it's different types of risks. But I really like what I saw when I opened up those fundamentals. This is still broken. This really looks promising to me. It's not quite the... And then... Now, part of the reason these numbers look tremendous is because those leases weren't on the books. You know what I mean? Like, this is an accounting thing, right? Because they were off the books, but it's a legitimate liability, if you will, if we want to call it that. Really, return on equity was much smaller now, but I'm not so much concerned with that. I just care about the actual equity growth. But yeah, I get it. Those leases, they're still liabilities, blah, blah, blah. And these numbers are way larger than they should be because of that. Because if those were on the books, the return on assets and so forth would be smaller. But the equity growth is real. And okay. Nothing more to say on that one. Oh, it's already 9:45. Oh boy, we didn't get to weekly. I had a list of things, insiders. All right, Penn National Game. Oh, you know what I realized is I do still own Penn at a different account, and it is one of the best perform. It is now. It's the best. I can't believe that. I wasn't expecting it when I bought. Because no, that's right. I didn't. It's not a 12-bagger for me, because I didn't get at the low. I missed the low. It's at 49. Damn, that's dirty. Oh, that's dirty. Look at that. And that's bullish. This looks good. It's getting overbought again too. Dirty. I missed this. See what I'm talking about? March 18th. Boom. Did it get under 4? That's mass. More than 12-bagger. 13-bagger. I think I got an average of right here. Once it pulled back, I'm like, damn, I missed it. And I bought right here that week, and I got like at my cost basis, average cost. Maybe I did buy here. Maybe I bought some more, but I saw today the average was in the 9s. and so it's still it's almost a damn 5-bagger, you know? Shit. Anyway, I'm not an expert on that industry. I just spot it for the pullback looked way overdone. There was just that huge acquisition, right? I know Barstool and stuff, and I just thought, oh, geez. I mean, I didn't have much exposure. This was in my attempt to diversify. I'm like, oh, this is great because they just did this acquisition. Could be a game changer for them, and then it's selling off. Maybe people thought they're going to go bankrupt. I'm like, worth dabbling. Damn, crushing it. Zillow, PBI. I don't love PBI. I've owned it before. I've looked at it before. I don't think I ever pulled the trigger. Like back in 2012. I was looking at it. I missed it. It ended up doubling, but damn, holy shit. What is this? That's a little bit of a short squeeze. You think? That looks like it. Boom, 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 boom. Damn. It generates legitimate cash flows. It's got secular risks, heavily in debt. Oh, that looks like a little bit like a short squeeze. That chart looks good, but I doubt it's any insider buying. I doubt it's turning around. For better or worse, billion in market cap. Check it. Zillow, 17 billion. Nah, Zillow. Oh, I got 2 Zillows in there. What's that about? Gravity, nobility. Anything with insider, nothing like unless I see something that gets my attention. Interactive home entertainment. What do they do? Just curious. And I assume they make games. It offers a massively multiplayer online role playing. What games? How do I not know it? Ragnarok, yeah. Dawnbreak. I'm not too familiar with those. Cool. How's that doing? Curiosity. Whoa. Nice bounce back. Oh. A lot of strong bounce backs. Whoa. Whoa. Damn. What is that? 16's a 10. Was it a 50 bagger? Whoa, 50 bagger? Damn. Video games, huh? Would they think it was running out of cash or something? Did they get it? Then they suddenly got a hit, maybe? A gaming hit? That's sick. Good for them. Tenet goes back up. I did add to that one. I think we talked about that. Oh, anything? I'm not seeing anything here that's catching my Contura. I think that's coal. Oh, yeah, I'll check up on this. I never pulled the trigger on this. Coal. That guy owns some. Oh, that's looking okay. It's coal though, you know. Is anything happened on it? Insider buying or something? No. Anyone written anything on it? Should have seeking. Oh, seeking off I do have. Good. Oh yeah, I got well wisdom right there. Gotta get in the habit of 2019. No, nothing updated. Sometimes I just wanna. They just report today on a Friday? Did they do that? Wow. That's impressive. Did they try to do that? Sorry, I just need to see if they actually did that. Do people... Isn't that kind of sketchy to report on a Friday? If they did that, maybe that's... Just double check. You don't see that too often. No, the morning. All right. Maybe last night, this morning. Okay, just making sure. Nobility, national info... Relevance, Contango. I do I own it? I do. Small position. Yeah, that looked interesting. That seems like that the team, the management team behind them is and the investors in them are sticking by their side. Like it's gonna survive. Right here, I missed this. Then I was like, all right, I'll add this, but not super compelling. I mean, I got plenty of energy exposure. Not much energy moving on the upside today, huh? Oh, but you know what's looking good? I know we're running out of time, but man, RRC. This is a top. Look at this. This is a top position in the portfolio. I'll get some calls on it too. This looks good. I mean, is it going for 10? And this is big because it's kind of a big kind of a big position. This natural gas play is looking like today. This was a big move this week. This is the weekly portfolio too. And then it's, look at that, RSI is holding up. They never even got below 50. And on the daily, it's looking like, remember we were talking about it's like boxed in right here. I don't want to pull up and make a box. You see the box, right? It's kind of just like leveled off here. And even in the lows, it was a higher low. And I got a good sized position on this. And this is like the technical analysis has kind of been helping me on this. I'm like really putting it to the test here because those damn options, they're price sensitive, right? And so you got to be real careful with them. And I'm just like, no, it still looks good. And obviously, the fundamental thesis, I believe, is longer term. So the time limited options, you got to be careful. But it looks like a breaking us right there too. Above 9 would be terrific, but this still looks really good. And I know natural gas price, although natural gas prices pulled back, did they? All right, hanging right in there. They're volatile. It's more the equity prices themselves to keep your eye on. And if you look at RRC, and let me just check. Sorry, I'm doing this because it did catch my attention today. But right there, is it right at resistance? What do you think it's going to do? SWN's a little bit lower. And EQT, they're right there. Yeah, we'll see. It looks good though. I'd rather it here than down here, as far as where you are in the box. So we'll see what happens. But it looks to me like they're in something like it could all break out for an extra 10% or so, 20%, which would be big, especially for RRC and AR in particular. But I think this is like a multi-year thing. You know what I mean? So could it happen in 4 months? I don't know. Could happen in 1 week. It just depends. But this is bullish. This is undeniably bullish, right? So I got to keep my eye on that. But that was the big thing that caught my attention today. Do I have time to get to the... We got 10 minutes. Oh, I got to be quick. Excuse me. Vivo. Look at a lot of healthcare stuff down today, huh? Pharmaceuticals. This isn't really attention grabbing for me. I'm not that... Many reasons these would sell off. I'm not invested. You can't. None of them. There's not even anything that I was kind of tracking Vivo. I never did pull the trigger on it. Whoa. Well, see, right as soon as I say I'm going to pull the trigger, and then I got to add another damn missed opportunity. See what I mean? Oh, what? Is it not on the portfolio? Oh, what? I was tracking it. You see it on the watch, or is it on deck? It's in the watch list. How there's a healthcare. A healthcare company, healthcare supplies, in my watch list, and I didn't pull the trigger on it in March. I don't know what to say. Add it to the list. Stamp's not a real missed opportunity. It's just one. This one's a missed opportunity. Oh damn! I don't even remember the story. I don't feel like pulling it up right now. We don't have time. Check it out. The fundamentals look good. Not good. It just didn't look as bad as it was being priced. And I'm like looking at the chart. I'm like, what the hell? And I remember thinking, if they can just turn around, I have no idea why it turned around. Obviously, it sold off today. But that's the thing. It's just a couple key things you look at. That's why I want to do more videos for the Kitty Corner series, right? Starting with GameStop, just because I'm really dialed into it. But like some of these the videos I'm going to roll out, they're going to be so short because there's only so much I have to say about it. And then I'll pull the trigger based on that. And it's as simple as that. I mean, you just saw us do designer brands. If I were to turn that into a video, it can only be a couple minutes. There's not much to say except here's how it's performed historically, the management team, blah, blah, insider buying, blah, blah, blah. It's like the same old stuff. And I don't even remember what Vivo was, but that I added on the watch list signifies to me that it had some stuff I liked. And then when you just see it sell off and everything was selling off, you should at least pull the trigger. I don't know why I didn't pull the trigger on. I must have thought I was going bankrupt. That's really and again, you've heard me criticize myself before. I didn't buy enough companies that were going to go bankrupt. So in that light, this could have been one of those companies that I wish did I make that note? Keep eye on buy more companies going bankrupt. In major sell-offs. You know what I mean? Just a reminder. Maybe type it and it's going to help me remember it too, you know? All right, do I get time to go through Carvana? Oh yeah, boy, that's another. I didn't buy this one, but that crushed it. I think there was a fund. I know he's a value guy. I think who bought that day. He bought that day. We just talked about that. Oh, no, April 1st. Okay, my bad. Oh, didn't he? Is he involved with those? Oh, my bad. I had it all wrong. I thought he was involved with those. Carvana. Interesting business model. Wow, a lot of stuff down today. Hey, Funko was down. Riot was down, that blockchain play. Wow, is there a lot of tech down today? Healthcare and some tech? Changing of the guard? We saw some value. We saw value did okay today. Yeah, healthcare and some tech. The Dropbox down. What was up with today? What did the market do? Shouldn't I know that? I don't know. Oh, NASDAQ was down 1%. And small cap was up 1%. Whoa. Interesting. Interesting. I probably have a chart related to that in the dash, but I won't get into that now. Wow, yeah, see? You can tell from the in the individual companies, you know what I mean? Like I didn't even need something, like a lot of my names were up and not so much energy, but and then healthcare and tech was down. Not that it matters. In the grand scheme, it doesn't matter. It's one day. Who cares? But still interesting. Okay, we only got a couple minutes. I didn't get to so much today. Let me get to the dash. And let's just look quickly. What moved today in the portfolio? GameStop was down 6%. Let's hope it can get below 4. That would be terrific. I don't know what that bid up was this week. We'll see. This still it seems like it could come back down. That'd be great if it can get back down under 4. One more round before we get any news. It might. I don't know if they're. Yeah, we'll see. RRC. This was a big move. Natural gas. These natural gas stocks. I already pulled it up, but everything else pretty quiet. PBF. I didn't end up buying more of that. Pretty quiet day overall. Looks like ASPS minus. Oh, is it down under 10? Did it have a big sell-off recently? I thought it was just at 30. Oh. I missed that yesterday. See? If we don't have it daily. Oh, big sell-off. I don't even know. Got so many positions. Oh, I should look into that. No, I don't have time. All right, look into ASPS. Oh, that's too bad. This looked kind of bearish, huh? Even the RSI too. I'm sure I trimmed, but it's still, you can still see the percentage portfolio. Yeah, if I trimmed, I didn't trim a lot because that's still kind of big. Okay, bummer. Okay, 5% on EQT, even EQT up. A lot of natural gas up. Quad down 8%. Wow, what's that about? And it's still 345. That's still an okay price. But a lot of these are still okay. That's the thing. A lot of these, I don't say too many super compelling opportunities. I say DBI looks good. It does, relatively speaking. GameStop looks great. But other than that, like things have bounced back, and now they just look like okay cheap. They don't look crazy cheap. And I really get excited when things look crazy cheap. Oh, damn. DBI was up 12% today. That's right. That's why we pulled it up. GII is another one that looks possibly compelling. I mean, it's already, maybe I'll add to that. I wonder why that was up today. I'll have to investigate. Check out, and check out GII for similar reasons. I think they related to apparel and stuff. Fossil still looks interesting. Nothing today. WPRT popping. This is like a alternative energy for engines and stuff. Yeah, that's just a kind of a thesis play. All right, and then Intero was up today too. Okay, so stuff was up today. Yeah, huh? Some value stuff was up. RLJ bouncing back. All right. Okay, so we didn't get to much. We didn't get to everything that I hope to get to. We barely got through the daily movers, and then but we got to investigate some stocks today, which for the first time in to dig in deeper into some. So that was good. And then we didn't get to weekly and insider buying and stuff, but that's okay. We'll figure out what this is going to look like moving forward. We just got to test different days, and soon I'll be up to speed on all these positions and stuff, and maybe we'll just crank through everything. But that's the thing, is different days you do different type of research. Some days you're just screening, some days you're digging deep, some days you're going down a rabbit hole and you don't uncover anything. It's fine. It's no big deal. That's just the nature of it. But all right. So what do you got? 1 minute left? Okay. Well, so goes the first week of live streaming. Cheers. Hope you enjoyed. And yeah, we'll see. For now, we'll keep the current schedule. We'll see how it goes. Just testing it out, and then and yeah. So I'll be back on Monday, and we'll see what the weekend brings. I know people always try to like maybe close out of their positions before the weekends. It's no difference for me. It's just another day. Although more stuff can happen on the weekend, but yeah, we'll see. But so have a nice rest of the night. Have a nice rest of the weekend, and I'll see you on Monday. And to bow out, I'm gonna do the outro video again. And so let me kick this off. And again, have a nice day and a nice weekend.